From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-Concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-Concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing E-Concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-Concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-Concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, E-Concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got stocks higher across the board. Traders gearing up for a string of earnings reports from big technology heavyweights this week, including Facebook today after the bell, while keeping in mind inflation concerns and rising COVID-19 risks. Facebook shares, they're back on the plus side now, up by about 0.2%. Among some of the other big tech names, Amazon on the minus side, down 0.5%. Apple up 0.1%. Microsoft shares, they are down now by 0.2%. Just getting word that Netflix has been raised to investment grade by Standard & Poor's with a stable outlook. So the Dow, the S&P, NASDAQ are all advancing. S&P again up by 0.5%, up 22 points. We've got the 10-year yield at 1.63%. Spot gold up 0.8%, 18.06 the ounce. West Texas Intermediate crude up 0.2, 83.90 a barrel. The Dow up 0.2, NASDAQ up by 0.9%. As for the market backdrop, Priya Misra is global head of rate strategy at TD Securities.
The market has repriced the hiking cycle significantly, and what we heard from Chair Powell, we also heard that from Secretary Yellen over the weekend, was that inflation, supply chain issues are likely to last well into 2022. So I think they're trying to tell us, look, this is going to be with us for a while. But the Fed is going to taper very soon, so we expect an announcement next week.
Big news out of Hertz Global Holdings and Tesla today. Hertz, barely 4 months out of bankruptcy, has placed an order for 100,000 Teslas in the first step of an ambitious plan to electrify its rental car fleet. Tesla shares, they're up by 9.5%. Hertz Global Holdings up now by 7.4%. Recapping, the S&P's up 21 points, up by 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So if you want to know what is the most read story on the Bloomberg today, it's the story that Charlie mentioned, and before we got going, we were all talking around the table about.
It's all about Tesla and Hertz. 100,000 cars.
$1 trillion market cap.
Big day for both companies. Bigger day for Tesla.
Both stocks are rallying, so we're going to get into that. Folks, this is Bloomberg Business Week. Welcome. We are live in our Bloomberg Interactive Brokers studio, streaming on YouTube. It's another Monday, our last Monday of the month of October. Ticking down to a lot of tech earnings, also ticking down to a Fed meeting. That's just around the corner. We've got that Bloomberg exclusive on Hertz and Tesla. We're also going to be all in on Facebook, Tim.
Yeah, earnings after the close. And what the heck is going on inside the company? That deluge of stories this morning.
Yeah, exactly. We've got a bunch of our team digging into that. The M&A bonanza, we're going to talk about that, putting deal making on track for a record year despite, hey folks, we're still in a pandemic.
Also, the real-life Succession story that's playing out in Canada. Who needs that HBO series when you can just look to our friends north for what's going on at Rogers?
Exactly. We've also got the author of Conditional Citizens on Belonging in America, her own personal story, and just looking more at the pursuit of health and happiness here in America. First up, though, let's get to the Market Drivers Report. Let's set the Business Week agenda. Dave Wilson in the house in our Interactive Broker studio. Stocks editor at Bloomberg News. Pretty good. Bloomberg Markets correspondent at Bloomberg News, also in our Interactive Broker studio. Kriti, what jumps out at you?
I mean, can we talk about Tesla? Because it's kind of important. I feel like it is the story of the day. I mean, we've just come so far. And this is such a recent story because not only did it, did Hertz order 100,000 electric vehicles, not only did Tesla cross 1 trillion, but it also crossed the market cap of Facebook. So Tesla's having a really good day. Facebook, not such a great day, which is interesting. So does that make Tesla, this is the question, this is $1 million question, $1 trillion question maybe, is Tesla a tech company? I don't know.
Well, it's valued like a tech company.
Valued like a tech company.
Kathy Wood would say yes. I mean, it's technology, it's car, it's a lot of different things.
It's a software company, right? Apparently.
You get into a modern car, it's all software, right?
It is, but building a car is a lot more difficult than building a platform.
That is true.
Like physically building a car, especially here in the U.S.
Right, but he seems to have mastered both.
Well,
right?
let me throw some figures at you, and then we'll have to get Dave's take because he knows the story better. But essentially, if you look at the MSCI World Automobiles Index and talk about market cap, you have Tesla hitting $1 trillion, and then the next one below it is Toyota, only at about, and I'm just going to pull these numbers up really quickly.
And they're the world's largest manufacturer of cars, correct?
Apparently, and 292 billion. So massive difference.
Here's how
She
you
wants
want
logic.
Here's how you want to look at this.
Okay.
She mentioned the MSCI World Automobiles Index. There are 18 companies in that index. Names we all know: Ford, GM, Toyota, you name it. The market value of Tesla is roughly equivalent to the market value of all the other companies in the index, all 17 of them.
Well, so are we investors at large banking on the future and assuming that Tesla will be one of the big players? I mean, the EV market is a growing market, right? Not so for old cars.
And they may well be assuming a whole lot more. Let's face it. Tesla does have a little business with, solar panels and things like that. And
getting people up into space.
Yeah, and they got a battery deal with Panasonic. And, who knows what comes out of that is really the issue. You would figure, given the comparison between Tesla and its peers, you do have to ask the question, who are the real peers of this company? Is it just, the likes of Apple and Microsoft or Amazon, or is it the other automakers?
Tesla up 76% from that March 8th low.
Look, Adam
That's
Jonas at Morgan
amazing.
Stanley doesn't think it's that crazy. He's a $1,200 price target on the company.
Yeah, and it was that price target that was actually, 2.5% rally before our scoop really hit. And this is actually a story that just came out from the credit team. Tesla, the first junk company to get a $1 trillion valuation.
Wow.
It's insane.
Which is wild. Kathy Wood has put like a base case of Tesla at 3,000 before she maybe starts to look at the story and wonder about, whether maybe its run has, but that's just the base case.
Let's put this in a market context real quickly, though.
Please.
Point out that the consumer discretionary category that includes Tesla is the best performer on the day among the 11 main industry groups in the S&P 500, followed by commodity producers, energy, materials. So, 9 of the 11 are up. The only ones that are down, financials and utilities, and they're only off less than 0.1%.
It's optimism, right?
It's a lot of optimism, but Creedy, can you talk about the markets today without talking about Tesla?
I think I can, and I think the story outside of Tesla is going to be commodities. But one of the actually interesting, I'm not sure if this is true or not, but tell me what you guys think. I was listening to some analyst commentary about Tesla, and they said that Tesla was rallying.
The answer to my question is no.
Hold on. Stay with me. Stay with me. That Tesla might actually have, when part of their bull case might be the fact that commodity prices are continuing to rise. Therefore, people might favor electric vehicles even more. And that was, of course, a much longer term base case. But in today's story, take Tesla out of the picture. It is still inflation. It is still commodities. We're still seeing WTI crude prices. They were rising quite a bit. They've fallen since then, but we're getting into scary territory when it comes to commodities. And even Kimberly-Clark, for example, down today because they said, they cut their forecast for a third straight quarter, citing, surprise, surprise, inflationary pressures and commodity costs.
Just depends how long those inflationary pressures exist. Are they part of the new equation? Dave Wilson, what else you got for us?
I'm just waiting for Facebook after the close, thank you. And we'll see what the company has to say about all these stories, if anything.
If anything, I think is the key phrase there.
Yeah.
Certainly they'll be asked, but will Mark Zuckerberg, first of all, be on the call? He usually is.
That's a good point.
And will he answer any questions?
All right, folks, we got to run. Good stuff at the top of our show. Creedy Gupta, Dave Wilson, thank you so much. Dave will be back with his chart of the day.
Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot, and it's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. You can learn more at GEP.com. We had to do it.
I know. Today's number is 100,000. Hertz has ordered, if you weren't listening and you fell asleep at some point, and now you're just waking up, Tesla is the recipient of a $100,000 order from Hertz, which has ambitious plans to electrify its car rental fleet.
The cars will be delivered over the next 14 months. Tesla's Model 3 sedans will be available to rent at Hertz locations in major U.S. markets and parts of Europe starting in early November. That's just a few weeks away, the rental company saying in a statement. We're going to have more on this later.
We certainly will, and that's just, roughly 4 months or so out of bankruptcy, so a different Hertz potentially going forward. You drive a Hertz as a rental, you might buy one. Maybe that's the thing. All right, let's get to world and national news. Over to Nancy Lyons. She's in D.C. Hey, Nance.
Hey, Carol. The conversations between Democrats continue on the president's Build Back Better agenda, with leaders saying an agreement between progressives and moderates on social spending is getting closer. President Biden was asked today about his meeting over the weekend with holdout Democratic Senator Joe Manchin.
Went well. A few more things to work out, but it went well.
Biden is trying to reach an agreement with moderates in the Senate who have objected to the price tag for the social spending legislation initially proposed at $3.5 trillion over a decade. Moderna says its COVID-19 vaccine shows a strong immune response in younger children in a late-stage clinical trial, paving the way for submission to regulators for clearance in those ages 6 to under 12. The children received about half the dose that was given to adults. As more vaccines do become available, more of us are returning to the airport. Bloomberg's Amy Morris has the latest numbers from Washington.
Air traffic nearly ground to a halt during the peak of the pandemic shutdown last year. Now, airline passenger numbers are climbing steadily. Daily traffic rose 30% just yesterday. It's up 114% from a year ago. A little more than 2.1 million people flew in the U.S. yesterday, compared to not quite 984,000 last year. Now that summer is over, airline travel has slowed a bit. Average daily passenger numbers slipped 3.5% in the past week. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stenovic, it is Monday. Feels like a Monday. It feels like fall, doesn't it?
It does feel like fall. This weekend really felt like fall in New England. Well, I can call it New England, but like in the Northeast.
Beautiful.
Felt like New England in the Northeast.
We went for a little bit of a ride and kind of went a little bit up north, and that's where you started to see leaves changing, and it was really beautiful, but it had that crisp feel. It was cold at night.
Yeah, it's nice.
It was nice. Not so nice, I guess, is a story that we've got from Dow Jones, folks over at Wall Street Journal. Each wave of COVID-19 patients that has crashed through the doors of Long Island Jewish Medical Center in Queens has become more manageable than the last. But it does talk about, the headline on it is New York City inching toward COVID-19 becoming endemic. This is something I think so rightfully so smartly so, you brought up with some of our medical conversations last week, that do we move from COVID being a pandemic to endemic?
Right, and experts agree the answer is yes. The question is, when does that happen? So we've heard for months that we're going to move from the state where it's all COVID all the time and the focus is COVID to something where it looks more like the seasonal flu.
Right.
Maybe we get yearly vaccinations like we get them for the flu in order to do that. And I saw this story in Dow Jones earlier today, and I thought to myself, well, maybe we are getting close to that, at least for us here in New York.
Yeah, and it's a case of it because it's more like a chronic problem, right? Just a situation we have to deal with ongoing, than as an immediate pandemic problem like we were in before, where we saw those incredible surges and the system being strained. It certainly feels that way as we move forward and we kind of see the economy increasingly open up, that we're just figuring out how do we manage it, and then hopefully knock on metal that it doesn't go back to those spikes that became difficult to deal with.
Yeah, I think one element that we still don't have is vaccinations for the youngest members of our communities, and that's a big deal because we have that for the seasonal flu.
Right.
So when that happens, that will be a sure sign, in my opinion, and we're going to ask Dr. Hazeltine about this too, if and when we get there.
And to be fair, and just put it into kind of the context of our audience, is that is one thing that when you talk to investment advisors, folks in the business world say, you know, one other factor that we've really got to get over is COVID and the pandemic, that is always one of the outliers and questions still out there.
reports, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Records for the Dow and the S&P 500 Index. An update for NASDAQ. Stocks are advancing as traders gear up for a string of earnings reports from tech giants, including Facebook, while keeping in mind inflation concerns and rising COVID-19 risks. Facebook shares ahead of its earnings report after the bell, up now by 0.3%. S&P's up 22, higher by 0.5. We've got NASDAQ up 0.9%, advancing by 139 points. The Dow is up 76, up by 0.2%. 10-year yield 1.63%. Spot gold up 0.8%, 18.07 the ounce. And West Texas Intermediate crude down 0.2%. WTI 83.60 a barrel. PayPal Holdings is surging after saying it is not pursuing an acquisition of Pinterest, ending days of speculation about a potential $45 billion deal. Pinterest shares, they are declining today. Right now, we do have Pinterest moving lower by just about 12.9%. PayPal, on the plus side, PayPal is advancing by 4%. Again, recapping, equities higher, S&P at a record up 23, up 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So among the COVID headlines, Moderna saying its COVID-19 vaccine showed a strong immune response in younger children in a late-stage clinical trial. So that's paving really the way for submission to regulators for clearance in those age 6 to under 12. That's something, Tim, you've really been focusing on.
Yeah, I certainly have. And even kids who are younger than that.
Right.
That's the question. Also, some more good news. U.S. COVID hospitalizations dropped to the lowest since July 31st. Which is some great news considering where we were for much of the month of September and the early part of this month.
It's a good trend line that we like to hear about. Dr. William Haseltine is back with us, Chairman and President of Access Health International. It's a nonprofit think tank. They are on a mission to improve access to high quality and affordable health care for people everywhere. He has founded more than a dozen biotech companies, including Human Genome Sciences. He is an author, CVPTSD, COVID-related post-traumatic stress disorder, what it is and what to do about it, and many more articles and books. He joins us once again on the phone from Connecticut. Dr. Haseltine, nice to have you back with us. Among the COVID headlines that are out there in terms of working towards getting kids vaccinated, the mix and match, the trend lines, what is it that you think is of most importance?
Well, the most important is for people to be vaccinated. And the second most important is to make sure that if you're in a region where you think you might get infected, make sure you take all precautions. That means mask wearing, and it means avoiding crowds. So there's still parts of the U.S. where that's important, and it's important to follow that advice. And if you have had 2 shots and it's more than 6 months, it's probably time to get the third.
Everybody?
Everybody.
Did you get your third?
I certainly did.
Okay, I remember you months ago saying, I'm going to mark my calendar. When it's 6 months, I'm going for it.
I'm just doing some math on my fingers right now, thinking if it's...
I'm at 6 months.
5 months, but I jumped the gun a little bit. But you were right, and I'm very happy I did.
Hey, Dr. Haseltine, since we last spoke, since you were last on our show, there has been a lot of developments, not just with COVID, but for treatments as well. We did learn that Merck is looking for emergency use authorization for its COVID-19 pill. And you wrote earlier this month that there are concerns around that approval process. Share with us your thinking, because I think to a lot of people, this was seen as really great news.
Well, it's great news that drugs are coming along, and there are 3 or 4, actually about 5 in clinical development. This drug, molnupiravir, is an interesting drug by the way it works. It works differently from all others. It causes the virus to mutate itself to death. Now, there are several concerns. The number one concern is, will you mutate SARS-CoV to something worse than it is? That is a real danger, and it exceeds all other dangers of the kind of resistance or side effects that might arise. Because if you make a virus worse than it is, it affects all of humanity. This virus is bad enough. We don't want somebody taking a small dose by accident of the drug and mutating it so it doesn't die, but it just gets worse. So anything, I think the FDA has got to be very, very cautious in their approval of this drug. Moreover, I spent years working on DNA damage and its repair and mutagenesis. This is a genotoxic drug which causes mutations in human genes and could cause birth defects. And one of the interesting things about the clinical trials is they told people who were in the clinical trial either not to have sex or only do it with very strong birth controls because they were worried about that. So I think the FDA might approve this, but it's got to be for a very narrow indication. For me, the danger is people saying, oh, I'm going to take this drug to prevent me from getting infected. I think the FDA has to put a very clear message out that only those people with proven infection should take this drug, and then for as short a period as possible, both they're dangerous to themselves and the danger that they might create a worse virus. We don't want to have another Vioxx.
It sounds to me like it might be for such narrow indications that it makes me wonder, do the risks outweigh, at least in your perspective, the risks outweigh the benefits?
You know, I haven't seen all the data, and the FDA will see all the data.
Okay.
All I can say from what I know, from what I've seen, and from reading the clinical protocols, that I would urge the FDA to be extraordinarily cautious with respect to their approval, and possibly to put a black box on the approval process saying this can be harmful to women who are pregnant. It can have a long-term carcinogenic, that's cancer-causing effect, if you take it. And if you need to take it because it's the only thing available, fine. But, you know, the other thing I'm aware of is there are companies all over the world making tons of this drug. And the moment we get a partial approval from the FDA, I think this drug is going to go on sale in a pretty much unregulated way around the world. And that could be very bad news for the creation of new variants. This drug works by speeding up the mutation rate of SARS-CoV-2. That's dangerous.
Well, and I will say our right through, I think it was in earlier this month, said interim analysis found no increased incidence of adverse events, but they said it still needs to be assessed in a much larger group of patients to properly determine its safety. So it does sound like something that many would argue needs more research and study. Dr. William Haseltine, thank you so much. Chairman and President at Access Health International, joining us on the phone from Connecticut. You know, Tim, we talk about everything's happening in front of us. So
I was just going to say that.
Right, some of it can be disarming, but you would assume regulators will continue to study.
We're watching the process play out in front of us.
Exactly. You're listening to Bloomberg Business Week right here on Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everyone. It's a story we just can't every time we're in a break, we're talking about Tesla and Hertz, and we're going to have the individual who here at Bloomberg broke this story, this Bloomberg exclusive.
Yeah, it's Eric Schatzker. In just a few minutes, he's going to be joining us live with all the details on this huge scoop.
All right, first up, back to your top business stories. A look at that trading day. Here is Charlie Pellet.
And I thank you very much. Got to begin with Tesla. Got to begin with Hertz. Hertz shares up now by 8.1%. Tesla rallying right now by 12.5%. NASDAQ now surging 155 points, up 1%. The Dow up 26, up by 0.6. The Dow up 90 points, higher by 0.3%. Traders gearing for a string of earnings reports from big tech heavyweights this week. After the bell today, Facebook up now by 0.4. We've got the 10-year yield 1.63%. Spot gold up $15 the ounce, up 0.9% at 18.08. A retreat for crude down 0.3%, 83.52 a barrel. U.S. COVID-19 hospitalizations have fallen to 6.8%, the least since July 31st. Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health.
In general, the projections that cases would go down are coming true, and we hope that that'll continue, and that's what the projections show. The question is how low they'll go, and that will depend really on how many people get vaccinated and on whether people can take precautions in places where the cases are going up.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names, mixed day, Pfizer down 0.3%. Its German partner BioNTech, the ADR is up 4.2%. AstraZeneca's ADR is down 0.2%. Moderna's rallying 5.9%. Johnson & Johnson up 0.2. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Love it when the most read story is by one of the good guys here at Bloomberg. We're talking about our own Eric Schatzker. He's a Bloomberg editor at large, and this story is, we just can't stop talking about it. It has to do with Hertz's order for 100,000 EVs. It pushed Tesla shares higher and the company's market cap to $1 trillion. We are all talking about it.
Eric Schatzker is editor at large, and he joins us now in the Bloomberg Interactive Brokers Studio. Eric, 100,000. Contextualize this number for us. A tenth of what Tesla produces in a year?
Yeah, it's equivalent to a tenth of Tesla's annual manufacturing capacity. And once these cars are delivered between now and the end of 2022, it will be fully a fifth of Hertz's 500,000 fleet of cars and trucks.
Wow. That's massive. So put it in context.
The numbers are big, for sure.
Right, and it upends so many different parts of the market. If you think about the rental car companies used to really, right, their fleets were often from the traditional auto manufacturers.
They were all
completely, right?
Entirely from the traditional auto manufacturers. General Motors is the biggest supplier. Nissan is the number 2 supplier to Hertz. Ford is the number 3 supplier. And furthermore, when these auto manufacturers were selling, they were typically selling cars that they weren't especially excited about making and often had sitting in the bookstore equivalent of a remainder lot. So the rental car companies would buy them at massively discounted prices. There was naturally an antagonistic relationship between the rental car company and the automaker, and this completely changes that equation because Hertz is buying these cars at close to list price, which brings the two companies much closer together, something akin to a partnership as opposed to an adversarial relationship.
Help us understand some logistics here, Eric, because you have to charge these.
You do.
And you have to think about rental cars. You got to fill it up before you go back, or else you get dinged. How does the charging network work, and how does Hertz ensure someone that they're going to be able to reliably charge it?
Well, for starters, Hertz customers who rent Teslas will have access to Tesla's network of 3,000 supercharging stations. So that helps a great deal because that's already made it possible for people to own Teslas and to find an acceptable, viable substitute for the gas station. But Hertz is building its own network of chargers, and they'll be at Hertz locations, whether they be at the airport or somewhere in suburbia or even, downtown in an urban center like in New York City, for example. And so Hertz customers will be able to use those as well. Furthermore, Did I say furthermore twice?
That's
Maybe.
okay. There's a lot of furthermore.
Moreover, how's that? Hertz is going to integrate Tesla's digital mobility technology with its own digital mobility technology in order to help customers get over the fear of range anxiety. The car will tell you what you have to do. As long as you tell the car where you're going, the car will tell you how much you've got left, where the supercharging station is that you need to drop by for 15 minutes to make sure that nobody has that crushing experience of being left out in the middle of the Mojave Desert with no fuel.
Furthermore, which is something you don't want. No, but I think about this story about the legitimization of Tesla and the legitimization of Hertz, like thinking about what they want to be in the future.
Well, for sure, this gives you an idea that Tesla has big plans to become an even bigger EV manufacturer than it already is. It's the only company that can manufacture EVs at scale, and this is proof positive that Elon Musk had not just a vision, but a viable vision.
Right.
Because Hertz can't buy from anybody else. And on the Hertz side, I think this shows you just how disrupted, if you like, an industry can be by people who come in from the outside. Knighthead Capital, the distressed debt hedge fund, and Certares, the private equity firm that specializes in travel, teamed up to buy Hertz out of bankruptcy for $6 billion. Boy, that looks like a good deal now.
Right.
But they're the ones who came up with the ideas to do this. And I'm really excited to see what else they do, because they're clearly intent on shaking up the rental car industry, which is a competitive, highly commoditized industry and isn't really used to being shaken up.
Hertz is 12.6 billion market cap as we speak.
Wow.
I know, right? So not too shabby.
I wonder when we look back on the history just in a couple of years of Tesla, if this is one of those moments, and we talked to Dana Hull about this, who covers Tesla at Bloomberg News. It's still, you know, when you see a Tesla out in the wild, you're still like, oh, there's a Tesla. You
But there's a
notice it.
lot more on the road.
There
than
are a
I've
lot
ever
more.
s- And
here in
East
New
Coast
York.
and
Yeah, in California,
used-
it's not really a thing anymore.
Right.
But does this get countrywide, like, okay, seeing a Tesla out?
We're going to see a whole lot more Teslas.
And it won't be a big deal anymore.
Well, this is 10% of the annual manufacturing capacity of Tesla, but Tesla is adding factories in Austin. It's adding a factory in Europe. And so we're going to see, on the basis of that alone, added capacity and more Teslas. And let's not forget, this is not an exclusive deal. Hertz, if it wants to, can go and buy EVs from other manufacturers. There just aren't any to buy right now. But Rivian's coming, Lucid's coming. All the big European producers, manufacturers are going to have their own. They're going to have their own EVs.
I don't hear Ford.
No. We should be talking about Detroit too, of course. General Motors has a very viable EV strategy, but they're targeting different parts of the market. The Chevy Bolt is at the bottom, and Cadillac, where they're also doing some really exciting EV stuff, is at the top end, just like Lucid and just like Rivian. There's nobody filling in the middle. Volkswagen is probably going to be a big manufacturer in the middle, because that's what Volkswagen does. You could anticipate that Toyota at some point is going to do something similar, but they are years behind. And that's the thing worth emphasizing. Again, Musk had a vision, need to manufacture at scale.
Yeah.
Why do you need to manufacture at scale? Because then you become the only guy on the block who can do a deal like this.
Which is what is playing out. To be continued. Eric Schatzker, editor-at-large at Bloomberg News. Check out his exclusive story on the Bloomberg.
Let's head to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim. President Biden is hopeful for a deal on his legislative agenda this week. He says he's looking for an agreement before he leaves for an international climate change conference that's being held in Scotland. Democrats are looking to pass a bipartisan infrastructure bill and a more partisan social spending measure. As the energy-hungry nations of the world do prepare for that major climate conference later this week, the price of oil is high and getting higher.
The oil-producing countries are resisting calls to produce more and moderate the price for a reason beyond profits right now, Ellen Wald of the Atlantic Council said in a Bloomberg interview.
They are very concerned that a lot of this climate rhetoric has been hurting investment in fossil fuels. Having these higher prices right now brings home their point that fossil fuels are still a really important part of the energy ecosystem. You still need us, so stop treating us like we're disposable.
Walt said Saudi Arabia and the others also recall how quickly high prices fell when recessions hit a few years ago. In Washington, Irv Chapman, Bloomberg Radio.
A powerful storm fueled by what meteorologists call a bomb cyclone has left parts of California underwater and facing mud flows in areas Experts predict the state could see potentially historic rain. The Biden administration has issued new rules for travelers to the U.S. requiring proof of full vaccination against COVID-19 in addition to a recent negative test. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Anne, thank you so much. Carol Massar, Tim Stenovic in our Interactive Brokers studio. My gainer is your decliner.
Yeah, we're talking Pinterest here. Shares of Pinterest down 13% as we speak, Carol.
Well, they had a big offer, or it seemed to look like there could be, at least there was speculation over a potential $45 billion deal from the company PayPal, right? We talked about this last week, was said to be interested. Well, lo and behold, the story comes out today that PayPal Holdings is not pursuing an acquisition of Pinterest, ending days of speculation over that potential $45 billion deal. That was about $70 a share. So
Yeah.
you're seeing the market correct as a result of that.
Yeah, shares down to $50 a share right now. Interestingly enough, the shares are trading lower right now than they were right before Bloomberg News last week reported the deal. I think a lot of that has to do with what we saw from Snap last week and the concerns over ad tracking from Apple and the supply chain woes. Again, we're going to hear from Facebook after the bell today, see how they address it. But interestingly enough, it's not trading like where it was before.
Well, and what's interesting, too, is I guess they put out a statement and said that they are not pursuing an acquisition of Pinterest at this time. To me was like, what?
What's so interesting? Okay, so the statement came out in the middle of the night, Wall Street time, right? I woke up really early. That was the
You
news.
were in early today.
And it could have come out on Wednesday. It couldn't come out on Thursday. It could have come out on Friday. It didn't.
Yeah.
It's interesting timing.
So to me, it makes me think, were they looking at it? What were the conversations? I mean, this is all speculation, everyone. I'm putting this out. But you do wonder that they didn't come right away and say, listen, folks, we're not doing this.
And it's just a one-sentence. It was a one-sentence statement.
But analysts have come out and they said, we are perplexed by this potential transaction, see little or no strategic rationale. This is Andrew Jeffrey over at Truist Securities. We see such a move as an act of near desperation. I don't know. We talked about these super platforms, right?
We did, yeah. Jenny Serrain has a great article at the Bloomberg. Check it out on the terminal and at Bloomberg.com about super apps and what they look like, especially in China.
Yeah.
But super apps are tough to do, and how Pinterest would fit into that with PayPal, it's not clear.
So Pinterest is down big time. PayPal is up almost 4%. Hence, Tim's decliner, my gainer. That's how it comes out. You might hear about this a little bit later on. Anyway, one of the stories that we're watching on this Monday for you. You are listening to Bloomberg Business Week. Carol Massar, Tim Stenovic. And coming up, we're going to talk about all of the M&A
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are advancing. We're looking at records for the Dow and the S&P. S&P up now by 22 points, up 0.5%. Busy week for tech earnings. After the bell today, we will be hearing from Facebook. Facebook shares up now by 0.4%. But while investors are very much focused on earnings, they're also keeping in mind inflation concerns and rising COVID-19 risks. Again, we've got records for the S&P and the Dow, with the Dow up 66, up 0.2%. NASDAQ up 143, up by 1%. 10-year yield 1.63%. Spot gold up 0.8%, 18.07 the ounce. West Texas Intermediate crude down 0.3%. WTI right now 83.50 a barrel. Shares of PayPal Holdings rising after the company said it is not pursuing an acquisition of Pinterest, ending days of speculation over a potential $45 billion deal. PayPal up now by 3.6%. Pinterest shares, they're plunging by 12.9%. And that's a Bloomberg Business Flash.
All right, so Charlie, thank you so much. I have to say, Tim, when I asked our Ed Hammond about a week or so ago what I needed to talk about at my Milken panel on global M&A, he said, well, record year, and how is that considering the backdrop? It was incredible advice.
Yeah, one thing that stuck out to me from this piece, and Ed Hammond is deals reporter at Bloomberg News. He joins us now here in New York City. Ed, one thing that really stuck out to me was something in the first paragraph. The record set in 2007. So let's talk numbers here. 4.1 trillion this year would break the record set in 2007 for M&A. By the end of 2021, transactions could easily top $5 trillion. Is this some sort of sign when there's M&A like this? Because we all know what happened after 2007.
I'm sort of hesitant to draw parallels between 2007 and now in terms of using the M&A market as a reason to suggest that the wheels are about to come off. Look, obviously we are long into a market cycle that has, had the top called many times. I was among those who thought M&A would probably have a pronounced and long-term slowdown after the pandemic or when we got into the pandemic. And as it turned out, it was, 1.5 quarters that it kind of stopped for or slowed down for, and then it's roared back. We saw it come back very strongly in the second half of 2020. That momentum continued so far throughout this year. And as you say, we're about to pass the 2007 record. We may indeed have passed it at some point today, and well on track to hit that $5 trillion by the end of the year, which is an astonishing number. I mean, in any circumstance, an astonishing number. But when you look at all the environmental factors going on in the background and why you wouldn't want to do a deal right now, I think even more so.
Well, and what's interesting, Ed, and you really did set up me so well. But what's interesting too is, these deal makers that I talked to, bankers over at Citi, at Deutsche, and elsewhere, they said that in many ways, members of the C-suite are getting kind of poked and prodded by their board for not doing deals right now. Talk to us about what you're hearing, why these deals are getting done, despite the backdrop of a pandemic and worries about the outlook and supply chain problems and so on.
I think part of it is just the cost of inertia is also very high. Look, obviously doing a deal at any time carries some risk, and you can get it wrong, and that can be consequential as a CEO. You can lose your board or your job, as a board. You can be tossed out. But I think right now, with the amount of disruption that's going on across industries and the sort of rapidity of change that almost every industry is going through, I think there are real costs to not doing stuff and not growing. And, at the moment, a lot of companies are maxed out on organic growth, and M&A is obviously a very quick and efficient way, a lot of the time, to sort of turbocharge that growth inorganically.
In reporting this story, Ed, you also looked at how investors react to companies that, when a company does announce an acquisition, both to the company getting acquired and the one doing the acquiring. What did you learn?
It's a really interesting trend that we've seen, Tim, where you have this sort of anomaly in the market where shareholders are coming out when companies announce deals and saying, this is something we do like, and they're reflecting that in the way the shares trade. Obviously, acquisitive companies have seen the shares trade up, which goes against almost every historical trend provided. The recent PayPal Pinterest deal that was talked about right before I came on, obviously that was slightly different, where you saw PayPal trend down and trade down heavily on the news and some extent, we think that's why they've now pulled the plug on that particular deal. But yeah, investors, again, look, they're happy to see companies going out, getting on the front foot and pulling whatever levers they can to achieve growth in this market. And I think that all comes back to the fact that we are seeing, not reckless deals. We're not seeing companies go out and try and do very, very large, complex, sort of horizontal mergers. This is much more vanilla. Let's go out, let's do a deal that actually is in line with what we said we want to do strategically, and perhaps it gets us slightly quicker from A to B than we would get there organically.
Well, how much of it, too, is pandemic related or a pandemic push, Ed, where, trends, disruptions, digitization was happening, but it might have happened over the next 3 to 5 years, and all of a sudden it was like, bam, it's happening now, and I've got to possibly do a deal, an acquisition to put my business in the right place to embrace that.
Yeah, and I think that comes back to this issue of disruption and the speed at which it's occurring now. And as you say, the pandemic sort of supercharged some of that activity. But you look at any industry now, and they are all, if they're not tech industries, they're tech-enabled industries. And so a lot of them, we've seen a lot of this already this year, are going and doing acquisitions that don't necessarily look like a sort of straightforward, an industrial company buying an industrial company. They're an industrial company buying a software company because they're realizing that actually this is the way we're going to keep growing. And it's much easier to go out and buy something small that we can just tuck in than build our own capabilities in an area that perhaps is not where we have existing skills.
Ed, how do SPACs play into the boom that we've seen over the last 18 months?
Well, look, in terms of the sort of headlines and the amount of noise and interest they command, they're enormous. But in terms of the actual dollar value, they're very, very tiny. SPACs, certainly if you look at the sort of the dollar value of the SPACs themselves rather than the dollar value of the companies they often reverse into as a minority holder, you're talking, it's de minimis. But obviously, trends, they have been, a driver of different kinds of activity. I'm sure you've seen some companies go out and do M&A because they were sort of worried about what might otherwise happen with a SPAC potentially buying a target that they were interested in. So I think it's contributed, but certainly there is a quite serious dislocation between the amount of noise SPACs have generated and the actual contribution they've had to overall M&A this year.
So, all right, if we end up with $5 trillion and then some this year, Ed, does that mean things necessarily slow down? Because I know from my panel, they all seemed gangbusters that it would continue into 2022. But what are you hearing? I mean, money is so cheap. Yeah, it's easy they've also got a lot of, cash to play around with.
Yeah, look, money is cheap. And that's often cited as one of the reasons we're seeing this great market. What I would say to that is money has been cheap for a long time, and there have been far few going on that would seem to dissuade people from doing M&A. So I don't think it's just cheap money. I think there's a lot of momentum going through the M&A market at the moment. Some of that is obviously catch up after we had that slowdown during COVID. And I think some of that will continue into 2022. The conversations we've been having, we had a Goldman Sachs M&A banker on Bloomberg TV this morning talking about the strength of the pipeline. They actually think is stronger than the current market conditions we're seeing, which would suggest going into 2022 we're going to have a lot of deals backed up, ready to go. Whether it continues through 2022, who knows? I think a lot of that will depend on what we see, in sort of global affairs, what we see in the domestic economy, but also obviously some of the sovereign risks that persist.
Hey, Ed, just 10 seconds. What derails this from continuing?
A great question. I thought COVID would, and it didn't. I think, rising interest rates is obviously going to be the number one factor that will knock business confidence and therefore M&A.
All right, going to leave it there. Get your sleep, Ed, because you're going to be busy, it sounds like, when it comes to continued M&A flow. Ed Hammond, he's our deals reporter at Bloomberg News. Check him out at Ed Hammond New York on Twitter, and you can always find his stories on the Bloomberg terminal and at Bloomberg.com. Get ready.
Also, shout out to Ed. He, along with Milana Baker, broke that Pinterest story last week.
Yeah, I mean, he's been busy, right?
Very busy.
Exactly. All right, you are listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Monday, October 25th. We're looking at records for the Dow and the S&P, NASDAQ pushing higher. Stocks are advancing as traders gear up for a string of earnings reports from technology heavyweights. We are just about 1 hour away from Facebook, and Facebook shares up now by 0.5%. Investors are also keeping in mind inflation concerns and rising COVID-19 risks. As for the economic backdrop and the outlook, Sarah House is senior economist at Wells Fargo Securities.
I think really what we see in the third quarter and September as we were seeing supply chain issues really come to the fore, as well as the Delta overhang. I think in many ways this is somewhat of an air pocket, and I think looking forward we still expect activity to pick up here in the coming months. But I think a big question hanging over the outlook remains inflation in terms of how high it gets and how corrosive it really gets to consumer spending.
S&P at a record right now, up 23, up 0.5%. The Dow is up 64, also at a record, up 0.2. NASDAQ up 152, higher by 1%. 10-year yield, 1.63%. We do have spot gold up 0.9%, 18.08 the ounce, and crude West Texas Intermediate down 0.2%, 83.56 a barrel on WTI. Again, we've got S&P pushing higher, up 22 points, up by 0.5%. Tesla's Model 3 was the top-selling vehicle in Europe last month, the first time an electric car has outsold rival models with gasoline engines. Tesla shares, they're up now by 12%. Hertz Global Holdings, barely 4 months out of bankruptcy, has placed an order for 100,000 Teslas in the first step out of an ambitious plan to electrify its rental fleet. And right now we do have Hertz shares up by 7.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to Bloomberg Business Week, and this story, it is the Bloomberg Big Take today. It is about the world's top 5 polluters being responsible for 60% of global emissions in 2019. China alone, though, generating about the same amount of CO2 as the next 4 countries combined. Its carbon output is still rising every year. We'll get into where this data is coming from. Joining us right now is Andy Brown, editorial director at Bloomberg New Economy, here in our Interactive Brokers studio. Climate change front and center with COP26, right? We're all focusing on what the world is doing to combat climate change, but if China's not part of it, so what, right?
At this point, it almost doesn't matter what the U.S. does, what Europe does. The fate of the planet is in the hands of China. And more specifically than that, in the hands of a handful, really just a few huge, ginormous state-owned enterprises in cement, in steel, and then in all of the industries that use cement and steel. So autos, machinery, real estate, infrastructure. And, this big take, we drilled into the numbers. And by the way, they're not that transparent. So it took a lot of digging, and our reporters did it with the Center for Research on Energy and Clean Air. And the results are that, you take a company like, for instance, Baowu. Baowu used to be called Bao Steel, big Shanghai steel maker, biggest steel maker in the whole country. Its emissions, it has a carbon footprint the size of Pakistan. Wow, you take a subsidiary of Sinopec. So Sinopec is the big Chinese oil major. One of its subsidiaries, I think it's called Petroleum and Chemical, right, has a carbon footprint, or had carbon emissions in 2019 the size of Canada. And Canada, by the way, is an emissions heavyweight. It ranks number 11 in the world. I mean, these numbers are really astonishing. It's the first time that anybody has put the numbers against these companies, and people outside of China probably never heard of
most of these companies.
So how do what these companies are doing align or not align with China's own goals when it comes to climate?
Right. So we know what the overall target is. President Xi Jinping has announced it, that, that carbon emissions are supposed to net out. They're supposed to go to zero by 2060. We're supposed to reach peak emissions, carbon emissions, by the end of this decade. But again, so much is going to depend on, whether or not these big companies can make a green transition. And they're very powerful. They have carbon emission, they have carbon footprint the size of countries, but they also have economic output the size of whole countries, right? And they have powerful links into city governments, into provincial governments, and the people that run them have ministerial ranks. They are, in a sense, they are massive fiefdoms, political fiefdoms.
You mentioned President Xi and his promise to zero out emissions by 2060, right? Which seems a long time away, if you look at what's happening to the climate today. How does he balance? His own climate is not great, right? And maybe pushed back by his own citizens. But how does he balance growth in that economy, right? That he's got to keep everybody happy, right? And avoid unrest, with also taking care of the climate, which is ultimately taking care of his citizens and their health.
That's exactly it. And that's really the story of COP26, where you have these long-range, high-level, pious targets of netting out carbon emissions. But what's going to happen in the near term? Well, we know what's happened in the near term.
We're living it.
In China right now, they're ramping up massively coal capacity to address their energy crunch, right? Yeah. They're building coal-fired power stations. Their coal emissions, their carbon emissions are far from peaking.
Things are literally moving in the exact wrong direction.
In the exact opposite direction. So the rest of the world is going to have to make up for what China is now doing, and that seems rather unlikely too.
So how do we approach? I think about so many of the new economy conversations. You guys are looking at this from such a high level and bringing in, people from all over the globe. So I don't know. How do we look at this? How do we go forward? What needs to happen?
Well, it's not all doom and gloom, right? Okay. So we need to balance this out a bit. So number one, the cost of renewable energy in China, that's wind and solar, is now cheaper than the cost of energy from fossil fuels. So that's a big positive. China is a global leader in electric vehicles. China has something like 80% of all of the world's output of lithium-ion batteries, okay? So these are big positives. Plus, China is massively investing in some of these frontier technologies, green hydrogen, as an example, carbon capture and storage. And if China can master some of these technologies, it has the ability to scale them in a way that no other country on earth can do. It did precisely that, of course, on electric cars, right. And it's doing that now on batteries and solar and wind.
Is there the political will to do that ultimately? Because at the same time, right, there will be industries then that are kind of taken out as a result, right? As these new alternatives come in?
They're very serious. Xi Jinping is very serious about reducing emissions. And in fact, that was one of the reasons they had an energy crunch this year, because the provincial authorities are under strict instructions to meet emissions targets, and some of them look like they were overshooting. So there is a serious commitment. The question really, as you say, is this trade-off between emissions and GDP growth.
Yeah, exactly. There's an uncomfortable period. We're seeing it with the energy sector just generally. We talk about this transition for the world, right, from moving away from carbon fuels.
Based on this story, it doesn't even sound like China's in a transition.
Yeah, yes.
It doesn't.
It is in a long-term transition, and as I say, on the technology side, there are a lot of positives.
All right, we'll see if the Earth, though, has that many years left. Andy Brown, I know, I don't mean to be so dismal. It's Monday, though. I'm feeling the gloom. Andy Brown, editorial director at Bloomberg New Economy in our Interactive Brokers. Andy, thank you as always.
Let's get a check of the latest world and national news. For that, we head to Washington, D.C. with Nancy Lyons. Hey, Nance.
Hey, Tim. West Virginia Senator Joe Manchin says Democrats should be able to reach a deal this week on a framework for President Joe Biden's economic agenda. Bloomberg's Washington correspondent Joe Matthews says President Biden welcomed Manchin to his home this weekend, but the specifics of those meetings are unclear.
He sat down at his home in Wilmington, not only with Senator Joe Manchin, but with Senate Majority Leader Chuck Schumer to try to hammer out some of the final sticking points. There have been no specifics from this White House. Deputy Press Secretary Karine Jean-Pierre only saying to reporters this morning that progress was made. There was progress in the meeting. We just don't know exactly how to quantify it.
Bloomberg's Joe Matthew will have more on Bloomberg Sound On later this afternoon at 5 p.m. Wall Street time here on Bloomberg Radio. The White House says it is deeply alarmed about a military coup in Sudan. Deputy Press Secretary Karine Jean-Pierre, speaking on Air Force One, called for the immediate release of the Prime Minister.
The actions today are in stark opposition to the will of the Sudanese people and their aspirations for peace, liberty, and justice.
Thousands of Sudanese have flooded into the streets to protest the coup that threatens the country's shaky progress toward democracy. Authorities have identified the remains of one of the victims of John Wayne Gacy. He was a mass murderer who was convicted of killing 33 young men and boys in the Chicago area in the 1970s. Cook County Sheriff Tom Dart says Francis Wayne Alexander of North Carolina would have been 21 or 22 years old when Gacy killed him. They believe this happened sometime between early 1976 and early 1977. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So you all know we are all in on Facebook today. They're going to report earnings after the closing bell. Stock right now just up about 0.6% ahead of those earnings. It's up about 19% this year. There is a slew of stories we're going to get into in just a moment about Facebook, but we've also got one story about what's going on in India.
Yeah, this is a really fascinating one. In February of 2019, Facebook set up a test account in India to determine how its own algorithms affect what people see in one of its fastest growing and most important overseas markets. The returns, Carol, stunned the company's own staff.
Those results did. Within 3 weeks, the new user's feed turned into a maelstrom of fake news and incendiary images. There were graphic photos of beheadings, doctored images of India airstrikes against Pakistan, and jingoistic scenes of violence. One group for, quote, things that make you laugh included fake news of 300 terrorists who died in a bombing in Pakistan. So, as they've moved into that country, the amount of terrible information that has come across that platform by any measure.
A lot of what we're learning today, and we've learned in recent weeks, whether it's the Wall Street Journal or Bloomberg's own reporting today, comes from Frances Haugen, the Facebook whistleblower. According to what one staffer wrote, quote, I've seen more images of dead people in the past 3 weeks than I've seen in my entire life. That's what one staffer wrote, according to a 46-page research note that's among the trove of documents released by Facebook whistleblower Frances Haugen.
And listen, this has to do with oversight in particular, especially when you look at the growth of a company like Facebook. These emerging markets are huge for them, especially like a market like India, Indonesia, Brazil as well. It's struggled, the company, to hire people with the language skills to impose even basic oversight. I mean, if you look at something like India, it's a country of 1.3 billion people with 22 official languages, so the oversight of the platform obviously is lacking.
I should note that Facebook, in a statement, said, quote, we've invested significantly in technology to find hate speech in various languages, including Hindi and Bengali. As a result, we've reduced the amount of hate speech that people see by half this year.
And working on improving enforcement, committed to updating their policies as hate speech evolves online. But this continues to be, even with that increased oversight, continues to be a problem.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Elon Musk's fortune is surging. The Dow, the S&P trading at or near records right now. Lots going on. Let's head right over to the First Word breaking news desk for today's afternoon calls. We say hello, and here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks overcoming a slow start today, but regarding Tesla, you mentioned, helped by that stock joining the $1 trillion club. Dow's currently up 59 points. S&P's gained 23. NASDAQ rises by 152. The U.S. 10-year yield at 1.63%. Gold is up 15. Transports gain 116 points. And Bitcoin climbs by 3%. Among the main 11 S&P sectors, only utilities and financials were in the red. And leaders to the upside in the Dow, Disney and Visa, while American Express fell 2.6% and led to the downside. After earnings, Kimberly-Clark fell as much as 5.8%. And in other news, Home Depot rose for an 11th day. That is the longest streak since the 1981 IPO. And CNBC reported that MasterCard is preparing to announce that banks and merchants can soon integrate crypto into their products. Wrapping things up, Facebook reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg, type Squawk, SQUAWK on your terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So among our most read on the Bloomberg today, no doubt about it. In fact, there's a flurry of stories. It's all about Facebook. Yes, they report after the close today. And yes, there are stories about the company's, internal struggles when it comes to misinformation and attracting a younger audience.
Well, Naomi Nix is a social media reporter here at Bloomberg News. She's with us from the Bloomberg 99.1 studio in Washington. Also joining us live from San Francisco is Kurt Wagner, technology reporter for Bloomberg News. We got a lot to get to with both of you. Naomi, I want to start with you because your story that Facebook privately worried about hate speech spawning violence was among the many that hit this morning as a result of Facebook whistleblower Frances Haugen. Give us a broad overview of what we learned new about Facebook today.
Yeah, I mean, I think so. Facebook has, for years been talking about the power of its AI systems to detect hate speech. It regularly releases these transparency reports that say that Facebook's systems detect more than 90% of the hate speech that it takes down off the platform before a user reports it to the company. What these documents show, though, is finally we have a sense of the total universe of hate speech that Facebook does and doesn't take action on overall. And what it suggests is that less than 5% of the hate speech is addressed by Facebook. And so that's one of the many revelations. We've also seen some revelations about how Facebook prioritizes fighting hate in the Western world and leaves developing regions behind. And to the extent that its algorithm, the mechanisms that are promoting content and making it viral are actually part of the problem.
So, and I feel like it gets to a bigger story, and Kurt, I want to bring you in, Kurt, on this too, about the transparency that the company kind of puts out there, that you may not agree with what they're doing on their platform about hate speech, but it's what we know and don't know. And the same thing has to, and I feel like this speaks to, as an investor, I want to know the company I'm investing in. And this speaks to also their audience, which is crucial to future growth. And that has to do, let's get to your story, Kurt, about the younger audience, the teenagers. I mean, they're not into Facebook, are they?
No, and I don't think you would be surprised, right, to hear that teens aren't really into Facebook. I wasn't either. But what I think these documents really showed is that not only is it a probably more serious problem than we all anticipated, but it doesn't just stop at teens. It also extends now to kind of what they call young adults, so people between 18 and 29 years old. We're seeing that teens used to kind of, maybe use Instagram and age up to Facebook. That's not happening as much anymore. We're seeing time spent, the number of messages, the number of posts that people create, all of that is going down. And I think if you're an investor, this is a hugely important audience, right? For advertisers, it's obviously the next wave of internet users that you imagine Facebook's going to lean on for its business. And you would want to know that, things are heading in the wrong direction. And so I think that's why this is such a troubling thing. And if you're a Facebook investor, you're probably not stoked to hear that.
Doesn't this get to the material information, right, as an investor, like what you need to know?
It does, but at the same time, it does seem like Facebook investors aren't even that concerned today. Shares of Facebook, even after this slew.
Right?
Right. Well, now they're up 1.28%, and even in the last 5 days, which includes the period of time where we saw that really terrible news from Pinterest, from Snap with its earnings, they're only down about 2%. So, Naomi, what do you make of that?
Well, I think it just speaks to the power of Facebook in this market and the advertising business it's built. And I think it also speaks to the fact that perhaps investors are seeing that, this is just another one of its many political crises that the company has weathered in the past. But, in actuality, regulators haven't really been able to put a dimmer on Facebook's growth despite years of controversies. And so, perhaps, that's what investors are seeing. They're seeing this as more of a PR crisis than a true sort of business regulatory crisis.
Well, and I do feel like we're getting to a point where we've got to, as a company, they've got to figure out, hate speech, you guys write about it. Naomi, you write it in your story with Lauren Eder that conservatives and liberals often define hate speech differently. This gets into a tricky area, and we talk about this often about, freedom of speech. But I also think about what, Kurt was saying, that if I'm investing in this company for the future, I want to know that there's going to be a future audience. It's an advertising-based model, at least at this point. And if it's not going to be there in a few years, that might, Kurt, impact whether or not I want to invest in this company.
Yeah, of course. And I think they've been able to mask this because the service is just so big, because they have so much growth in other markets and other age groups, right? But I think the future thing is really important, and it's not the kind of thing that's going to happen overnight, right? It might take years for this to materialize, but I think it's important that people understand the trajectory here.
Hey, really quick, guys, we don't have a lot of time. 10 seconds here. Naomi, what's a question you would ask on the call tonight?
Well, I think I would ask about the revelations around Kurt's story. Why has it not been more upfront about a true user breakdown for all of its apps by age and demographic? And does it plan to do that in the future?
And Kurt, what about for you, real quickly?
How about what's the new name going to be? I'm eagerly
I like it.
I love you guys. So great. Incredible reporting. There's so many incredible stories by Kurt, by Naomi, by our team at large when it comes to Facebook. And of course, we get earnings after the closing bell today.
I think I might ask those questions. No, I'm not on the call.
No, but it's great.
Yeah,
they whittled it down. There's just so much.
The question is, do they answer questions like that?
Yeah, exactly. And will Mark Zuckerberg be there? This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah.
It's Bloomberg Business Week. Tim Stenevec and Carol Mass are live in the Bloomberg Interactive Broker Studios. Also with us right now, Dave Wilson, because in just a couple of minutes, Carol.
I was afraid you were going to bring him in.
I'm not going to bring him in. I know where we are.
We got a form we got to
I'm just getting ready. I'm mentally preparing.
I don't want to freak out Reg in the control room or Ari or
don't worry, Reg. We're good.
Marufo. They'll be like, what is he doing? We're not ready for him. But we are ready for Charlie Pellet. Hey, Charlie.
Here's what's going on. We have got the Dow, the S&P, NASDAQ all advancing. We are looking at records right now. Just like Dave Wilson is, we're looking at a record for the Dow, up 55 points, up 0.2%. S&P up 20, higher by 0.5%. NASDAQ pushing higher, up 142, up by 0.9%. Worth recapping the year-to-date numbers because the S&P so far this year up by 21.5%. We've got the Dow so far for the year up 16.7%. NASDAQ Composite Index up by 18.2% today. NASDAQ up by 1%, S&P up now by 0.5%, the Dow up by 0.2%. Stocks are higher as traders gear up for a string of earnings reports from tech heavyweights, including Facebook after the bell. Facebook shares right now up 1.3%, but investors are also keeping in mind inflation concerns and rising COVID-19 risks. Moderna, meanwhile, says its vaccine did show a strong immune response in younger children in a late-stage clinical trial, paving the way for submission to regulators for clearance in those between the ages of 6 and 12. Moderna shares right now are up by 6.2%. Well, what about the messaging out of Washington, especially ahead of those vaccinations for children? Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health.
In general, I think it would probably be helpful to be talking a little bit ahead about what things are coming. And I think they've done a little better job of that as the pediatric vaccine is approached. But what I think is going to be really important is explaining not just the decision for the pediatric vaccine, but how additional data will be quickly gathered so that people who are reluctant initially are able to get questions answered.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we check every weekday. Pfizer down 0.3%. Its German partner BioNTech up 4.9%. Those are the ADRs. ADRs of AstraZeneca, they're flat on the day right now, unchanged. Moderna up by 6.3%. J&J, Johnson & Johnson up by 0.1%. Recapping, S&P up 21 points, up 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. This is Bloomberg.
Iteration. We used to play a lot of music in between our breaks when we were getting ready for a 5 a.m. show, and one of our producers loved Rush.
Indeed.
And so would play it all the time. New World Man.
Right. Who would have thought that phrase could ever apply to Donald Trump?
But here you go.
Here you go. You know, he creates this new media company. It's going to set up social media and more, and he decides to make a deal with a special purpose acquisition company, a.k.a. a SPAC. Ooh, I'll get it out. I was thinking more about sort of how you might describe the result of that deal, which, as the headline of my chart says, Trump's meme world. I mean, it isn't just Digital World Acquisition, which is the blank check company that's actually making
also known as DWAC.
DWAC, because that's the ticker DWAC.
DWAC is a SPAC.
Yeah, exactly.
Or might be a SPAC.
You have this software company called Funware, which actually did some work on the Trump re-election campaign last year. And, you know, if you looked at the last 2 days of last week, actually had a bigger gain, at one point at least, than Digital World did. I mean, we're talking almost 2,200%. And then, as it happens, there's a gentleman named Patrick Orlando that runs Digital World. He's also the CEO of 2 other SPACs. And so we've seen them, especially one of them, Benacer Capital, take off starting on Friday. And then the other one is based out of China. We wrote about it, Yonghang International, also up a bit on Friday. And there's one more, Makia Capital, where he serves as a director, not CEO, but nonetheless, you even saw a bit of a gain in that stock on Friday. So, you know, why settle for one meme stock when you can have 5? So that's Donald Trump's meme world in a nutshell. And if you want to see this performance for yourself, folks, and get the names of those companies, send me an email. I'll get everything to you along with what I do going forward. And the email address for that is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Right. So the dude behind all of these, that's the commonality, right? It's
exactly
Mr. Orlando, who we talked about on air as we are learning more about him and the work that he has done.
Right. So presumably the Reddit traders or whoever are kind of looking at this and say, well, okay, if this one SPAC is doing this, what about his other SPACs? And hence you have, you know, these moves.
Isn't dwack when you like walk into the door?
Dwack.
Well, last week, Thursday, it closed up 356%.
Nuts.
Friday, up 107%. Today, down about 8%.
Yeah, but
there you go. These things are volatile, no question. And looking across the group, Funware is actually down 18.5%.
Look at that dwack chart. I mean, it's just crazy. It's like straight line. It's like a Lego. You can make this out of Legos. It's just a straight line forever or several months, and then all of a sudden it's a straight curve up, and then a little bit of tailing off, right? Like you can do this.
I got an even wackier chart for you.
What do you got?
It's my stock of the day.
What is it?
Tim, you actually mentioned it a few moments ago before we came on air. Bakkt Holdings.
Wow.
Ticker BKKT. This is a pardon me.
Whoops, you okay?
Cryptocurrency outfit that was taken public by the Intercontinental Exchange, whom you know is the owner of the New York Stock Exchange. And it was a SPAC deal.
Do you want to take a breather? Do you want to just
I'm good.
Okay.
I'm good.
Go ahead.
It was a SPAC deal made in January and wasn't completed until a week ago. And actually, Bakkt shares fell the first 4 days after the deal happened, rose on Friday. Today, well, they got a couple of things going on. They partnered with the financial company Fiserv. And on top of that, they have a deal with MasterCard. You put that all together, and the shares have just taken off. At the moment, Bakkt Holdings, BAKKT, hence the 2 Ks in the ticker symbol, up 171%.
Wow. This is a stock I saw moving significantly. I clicked into it in the Bloomberg terminal. Shares had been halted, news pending, and that news after these agreements.
It's another chart you can build with Legos. I'm just saying, whoosh, straight line, straight up.
Wow.
It's
just
a new,
wild.
Well,
173%.
Right? Like, look at it. It's crazy.
Yeah.
It was below $10 for such a long time. All right, Dave Wilson, go get some water. All right.
Yeah, it's just wild to see moves like this.
It is.
Yeah.
All right, so it is, and it's interesting when you pull up a chart, and like I said, it's like a backwards L. This company, Bakkt Holdings, and same thing for when you look at DWAC, Digital World Acquisition Corporation, and how all of a sudden, I know, it's funny.
Well,
Come on, you know it's true. You like walk into a door, you're like, DWAC.
But I'm glad Dave Wilson explained this because we were kind of scratching our heads when this crossed earlier.
We were all trying to make sense out of it. All right, we're going to continue to follow it, count you down to the close. Right now, let's make some sense out of world and national news. Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden is working behind the scenes with lawmakers to come up with a compromise on his Build Back Better agenda. He's also touting the importance very publicly to crowds in New Jersey.
These bills are about competitiveness versus complacency. They're about expanding opportunity, not opportunity denied. They're about leading the world or continuing to let the world pass us by.
Biden says the $1.2 trillion infrastructure bill will rebuild the arteries of America. But the measure is hung up in a dispute over passage of a bigger social spending bill. The price tag of that $3.5 trillion measure is being pared down in negotiations between Democratic moderates and progressives. The world is on pace to warm up by another 2.7 degrees Celsius in the next 80 years, even with the national climate pledges by countries all around the world. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Yes.
Thank you so much for that update, Nancy Lyons. Tim Sedevec and Carol Mass are live in the Bloomberg Interactive Brokers studio in New York. Carol, did you spend all weekend just buying Shibu Inu?
I did not, but man, what does it cost?
You're
Is it like
the only one?
Did you?
No, I didn't, but a lot of people did.
Well, it's a great story. I was like, this is for our Charlie Vollmer, because we talk about this with him all the time. Elon Musk, we know, helped Shiba Inu vault up the ranks of the largest cryptocurrencies by market value. He tweeted a photo of his puppy. Now the meme token is down after he said he doesn't own any.
Yeah, right. So Musk, who repeatedly touted Dogecoin on social media and frequently commented on cryptocurrencies more broadly, responded to a query from a Twitter user asking how much Shiba Inu he holds with, quote, none. In a follow-up tweet, he said he has bought Bitcoin, Ether, and Dogecoin, and, quote, that's it. You know, you and I spoke to Scott Minerd last week at the Milken conference, and he brought up Shiba Inu. And I said, wait a second, this is a joke. And he said, you know what? We were joking about Dogecoin, too.
Right, exactly.
But he used it as an example of the money that's out there.
And it doesn't mean you can't make money on a joke, right? We have certainly seen that in other investments in our vast investment world. But I think this is the challenge that is crypto. Not all cryptos are alike. There's a ton of them out there. Something like, Shiba Inu, you could get into for very little money, right?
Yes.
Even though, and it was erratic, right? It rallied big time, and then we saw it sell off again.
Yeah, we did. But in terms of
Just
popularity, Coinbase, I'm looking at the Coinbase website for Shiba Inu, the profile page. It's number 9 in popularity today. It's got a market cap of $16.4 billion, according to Coinbase. And according to Coinbase, its price is, get this, 0.00004149 of a dollar.
So
it's a lot of zeros.
So, you throw like $10 at it, you can get a ton of this currency, which is what some people are saying, well, why not? Right? Let me throw a few $100s or something. Like you go and you buy a lottery ticket, or you go down to the casinos in Atlantic City or Vegas, right? You would throw down. Is it the same type of gambling?
It's up 41 million% this year.
41 million%. And it's still trading for what?
Less than a cent.
Okay.
Less than a cent. Less than a dollar.
Little perspective there. All right. You are listening to Bloomberg Radio.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. 13 minutes until we hear from Facebook. Shares of Facebook up now by 1.1%. We've got the Dow and the S&P 500 index, both at records. Right to the numbers. We'll give you the why in a moment here with the S&P up 20 points right now, up by about 0.5%. The Dow up 52, up by 0.1%. The Nasdaq Composite Index up 133, up by 0.9%. 10-year yield 1.63%. Stocks are higher as traders gear up for a string of earnings reports from tech heavyweights, including Facebook, but they're also keeping in mind inflation concerns and rising COVID-19 risks. Spot gold up 0.8%, back above 1,800, 18.06 the ounce, while crude is down 0.4%, 83.44 a barrel. Bitcoin today up by 2.6%, 62,761. Tesla shares rallying after getting an order for 100,000 cars from Hertz Global Holdings. Tesla shares up by 13.2%. Hertz Global up now by 9.8%. Recapping, S&P up 20, up 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Cryptocurrency has failed to sweep away government-issued money or to bring about the broader revolution that its most ardent enthusiasts envision. But what if the underlying technology could be harnessed to transform traditional fiat currencies? For example, by making them easier and cheaper for people around the world to use. This goal might be attainable, with help from the governments that crypto was meant to sideline. Consider stablecoins. As a unique form of electronic cash, they have the potential to improve money transfers. But they also pose risks that governments need to address. Smart regulation could ensure that crypto-enabled payment systems remain broadly accessible while still being more transparent than the current banking system. Surging technological innovation is already driving competition to upgrade the financial system. The result could benefit people everywhere, as long as regulators don't fall behind. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 10 and a half minutes left in today's trading session. What an interesting one, because, the first few minutes of trading today, we were down, but we have rallied off of those lows, and we've got some gains here, Tim.
Hello, Tesla.
Hello, Tesla and Hertz and a few other things. Let's get to it. Let's get to the drive to the close with Nadia Level. She is Senior U.S. Equity Strategist over at UBS Global Wealth Management with us on the phone from New York. Nadia, good to have you here with Tim and myself. We are all in about earnings, getting ready to be all in on big tech earnings. What's your make of, what do you think about the earnings so far and what's to come perhaps from big tech?
Yeah, it's still early in the season, but we think results are coming in really strong. It's coming even better than our initial above consensus expectations. We do expect that the beat rate that we have seen so far, 13%, much of that being driven by financial, we look for that to moderate. We are looking for earnings growth of this quarter of over 30% year over year. That would suggest a more roughly high single-digit beat rate. We do think that the sectors that are best positioned right now to surprise on the upside are energy and, as you said, parts of technology. Energy should get a boost from the higher oil prices that we've seen grinding high the last few weeks, and much of tech is more insulated from that supply chain disruption like software and the cloud players. So that should help boost tech earnings throughout the season.
When you say tech, do you also mean companies that rely on advertising for revenue? Because as we learned last week, Nadia, the supply chain can even affect those companies as a result of companies like, consumer packaged good companies that don't want to advertise as much because they are experiencing supply disruptions.
Absolutely. So that's in the communication services sector. Obviously, the questions around digital advertising. If you don't have the goods to sell, then it's tougher to advertise those goods. That said, I would say the other verticals, those more epicenter of the pandemic ones like leisure, entertainment, restaurants are coming back. So that should help offset any weakness that we're seeing in the goods vertical. So we think that will help some of the other larger players in the digital advertising space.
So just help me out here. Did you say 13% are beating, but you expect that to moderate? Is that quarter to quarter?
So 13% beat rate so far. And so coming into the season, consensus expectations for earnings growth this quarter was around 25% or so. And so we're seeing that come in much better than expected year over year. Now, that's a moderation than what we saw in the second quarter, but still very strong, just given the overall context.
That's earnings. What about revenues? I mean, it's the top line we really, focus on because companies can't really muck with that too much.
Exactly. You cannot generate sales. You cannot, engineer sales, right? But so S&P sales growth are really robust. This quarter, we're looking for 15% year-over-year growth or even better. We think that, that the point here is that demand remains really strong. And because that is the case, that should help on the margin side. I know margin has been an issue. We think that sales growth would allow that operating leverage to kick in as well, helping to offset some of those higher costs that companies are seeing.
What has been concerning you that you've heard from executives? I mean, for example, today we heard from Kimberly-Clark that it's been negatively impacted by significant inflation, supply chain disruptions that increase costs beyond what they anticipated, and they don't actually know when those things will be resolved. How concerning is that to you?
That is something that we're definitely watching. We think a lot of the costs that some of these companies are seeing are related to supply chain disruption, and we do think that that's transitory. It is taking a bit longer to resolve than we anticipated. We probably won't see a resolution of some of these issues until we get to around mid-2022. But I will say the thing that we're watching most closely is on the labor cost side, because we know that that's stickier than some of the more transitory inflationary pressure. And I think that this is where pricing power really comes in as well, and companies' ability to pass along some of those stickier costs to consumers.
Hey, Nettie, you guys do a lot of research, and I do wonder, Snap, if we look at it, it is down 29% since just before that disappointing earnings report where they talked about supply chain problems and how that's resulting in companies not ponying up when it comes to advertising. Should we anticipate that we will see that with the other social media platforms as well?
I think some of those issues are very company specific, because I do think that the larger ad players are better positioned. One, as I talked about earlier, those other verticals that have been opening up, the epicenter. But I do think that particular company also did cite, some issues around the changes in privacy settings on some operating systems. I think this is where scale comes into place. Some of those larger players have so much data on their users, and that they're able to help curtail some of the impact they're seeing by changes in privacy settings. And so the innovation that continues to happen with those larger digital advertised platforms is where really will come to bear this week.
Hey, Nadia, for the S&P 500, you continue to maintain June and December 2022 price targets. So June's 4,800, December 2022 is 5,000. Right now it's at 45.62 and change. What makes you revise those?
It's all earnings. If earnings continue to come in better than we expected, this year we're looking for 45% year-over-year EPS growth. Next year we're looking for 10%. And so if we see earnings continue to come in better than expected, that might prompt us to revise up our next year estimates. Also, I think the other thing that we're watching very closely is Washington on the tax side, because our number assumes a 4 to 5 percentage point drag from higher corporate tax rates. And now there's chatter that that might not even happen. So that could be a source of upside to our earnings expectations for next year.
Good thing to point out. And then there's always COVID, which we have to remember is
Oh, that
always
old
there
thing.
in our backdrop. All right, Nadia, thank you so much. Nadia Lovell, Senior Equity Strategist at UBS Global Wealth Management, joining us on the phone from New York City. Just a quick peek at the equity averages with just about 3.5 minutes to go, and we're just off our best levels of the session, still up about 19 points on the S&P 500, Dow better by 48 points, a little changed on that average, and the NASDAQ certainly the outperformer on a percentage basis, Tim, up about 0.8%, up 127 points.
Yeah, look at that. Wow, all in the green.
Yeah, exactly. Not how you would have maybe anticipated earlier, certainly when we kicked off at the open today. All right, coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the closing bell on this Monday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, and Shanali Basak in the house, counting you down to the closing bell where Remain takes a rest. Here to help take us beyond that bell with a global simulcast. We're joined now by Carol Massa, Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide. We're going to dig into the crucial moves, the moments of the day. The move, Carol, has got to be, well, our own Eric Schatzker's Hertz Tesla. I mean, what a phenomenal move, and it drives S&P 500 higher.
Yeah, both stocks higher. Tesla now are hitting, or at least it did hit during the day, $1 trillion in market cap. Dave Wilson had a great statistic. If you put all the big auto companies of the world together, they still wouldn't add up to the market cap of Tesla. A little bit of perspective as we continue to see disruption and innovation, Tim, in our marketplace.
Yeah, and a huge order on Hertz's part. 100,000 cars, about 10% of what Tesla produces in a year. Also, we can't forget about earnings, Taylor. We got Facebook after the bell, and this week, Amazon, Apple, Microsoft, Twitter, and more.
Yeah, and I think what was so interesting is some of the commentary that we got from Snap. A lot of the research notes, Janelle, that I was reading last week said Facebook, at least for their part, had been warning a lot about the changes with the Apple iOS software. Snap, of course, didn't, and that's why I think the market was so caught off guard. But then, of course, how far these supply chains go. I know with Facebook, when it comes to ad revenue, some of the questions were, how do you advertise when the shelves are empty and there are no products to buy? And so you're really thinking a big picture here about the company, not even to mention, of course, the Facebook papers that we've been talking about a lot today.
Yeah, you've been watching those supply chains. You're watching those Facebook papers. We're watching earnings for Facebook after the close. And we're getting that close just seconds away here now. Investors not biting on a lot of that bad news into Facebook.
Yeah, and we managed to actually rally off what had been a 5% sell-off on Friday. Facebook closing up more than a percentage point, as we say. Let's have a look across the indices right now, because as the bells ring and we settle on out, S&P 500 climbs 22, almost 23 points. That's almost 0.5% higher. 4,567 is where we close the day, a new record high. The Dow also getting a little bit of a bid, up 0.2%, 74 points, 23, 35,744. On the NASDAQ, though, there is your outperformance. Big tech, Tesla, thank you. NASDAQ up to 15,226, 136 points higher. That's 0.9%. And let's look over at the Russell 2000, because as big tech went higher, well, so too did the small cap. So too the cyclical trade. We currently closed out at 2,312. The Russell 2000 good for a 0.9%. That's 21 points higher. Taylor?
Yeah, let's take a look really here where we are in terms of some of the sector winners and some of the sector losers, as we do every day for our radio audience. There's a lot of green on the screen and a lot of red, but really, I think, Carol, what stands out to me is what is on the green side. Why don't you guess at what's up the most?
All right, well, I've got a Bloomberg in front of me.
Automobiles. Don't spoil it.
We can cheat because we have a Bloomberg in front of us.
Well, you know, shocker, of course, Tesla being one of the big movers on the day. So it's automobiles that are up 10.5%. And I think what else really captures this picture, Carol, steel, copper, some of the agricultural and farm machineries, those are up anywhere from 3.5% to 7%. Why? Because you're just getting a lot of this commodity price inflation. When we talk about oil, when we talk about wheat, when we talk about the planting season, really some of the break-evens that we've seen with these inflationary expectations continuing to rise.
Yeah, absolutely. And let's hit on a little bit more Hertz and Tesla, because that really was a story we could not talk about enough. Incredible reporting by our Eric Schatzker. Hertz Global, barely 4 months out of bankruptcy, ordering 100,000 Tesla EVs, ambitious plan to electrify its rental car fleet. So that company up more than 10% in today's session. Tesla, at the same time, as we've been talking about, now closing at more than $1 trillion market cap valuation. It's just astronomical, the move that we've seen. That stock is up, what is it, about 76% from its March 2021 low, up another almost 13% today. PayPal, I just want to mention real quickly, coming out and saying, we're not pursuing a deal with Pinterest, but also saying not pursuing an acquisition of Pinterest at this time. Anyway, PayPal was up about 2.7%, Tim.
Well, PayPal may have been up, but Pinterest finished the day lower, actually trading lower than it was just before. Our Ed Hammond and Liana Baker last week broke that news that PayPal was interested in buying it, finishing the day down more than 12.7%. The company earlier today, PayPal that is, saying it's not pursuing the acquisition of Pinterest. Pinterest shares lower on the day. Also keep an eye on Kimberly-Clark. It reported earnings this morning before the bell. Shares were down as much as 5.8%, finishing the day down more than 2.2%. This is all about inflation. The company cutting its annual forecast again amid supply chain disruptions, inflationary pressures. The company CEO saying, hey, we don't know when we are going to see these supply chain pressures alleviate. Also, Ball Corporation finishing the day down by more than 5% lower. It provides aluminum packaging for beverages. I know, personal care and more. It's a really important company because they provide aluminum packaging for drinks, for personal care. And this is about a shortage of magnesium. Truist says that a magnesium shortage could impact aluminum markets. Magnesium, of course, an element used in the production of aluminum.
Perfect segue to look across at what happened in the world of commodities, Tim, because in fact we got the bounce back, and that's what had helped some of the commodity pairs in the FX market drive higher. Look at the move in natural gas, up 13%. Phenomenal moves when you look at the United States. Of course, again, the crisis in the energy markets. We worry about how cold it'll get in the winter and what it means in terms of your gas production, and indeed how much US will be sending it over abroad to Asia, to Europe. We see actually some of the metals get a decent bid. Interestingly, WTI crude coming off of its highs, but it was still at $83 a barrel. That's why we still saw Aussie dollar up 0.4%. China adds to its stimulus. We saw the metals bounce back that somewhat. Euro down 0.3%. The dollar actually was pretty much in charge on most of the day. We're still anticipating, Taylor, a rise in the Federal Reserve rate, which means, of course, well, overall a rise in yields. But what do they do on the day?
Yeah, it was interesting. You saw some yield curve steepness as you talked about the Federal Reserve and perhaps maybe yields coming down on the front end just by 1 to 2 basis points. The 5-year below that key 120 level, but then yields were unched to rising higher, at least as you can see there on the long end, with the 30-year climbing 2 basis points to a 209. So that really supposed to help financials, though they weren't one of the bigger winners on the day. Really interesting, though, you guys, as we're looking at big tech. I think we've all decided no one cares about the discount rate and yields anymore when it comes to big tech. We don't care about fundamentals. We really do want to see some of the daily active users, some of that ad revenue, some of the iOS changes. Any commentary on a new name? Are we getting a new name, or do we call it Facebook?
Right.
Carol, you tell me.
I don't know. That's, we talked to Naomi Nix and Kurt Wagner, and the 2 questions they wanted to ask on the call is, what's the name change, and any reactions when it comes to breaking down the audience? Who's actually on Facebook, right? That was one of the big stories, and all of the stories that's coming out.
Breaking
Facebook
now.
crossing, Caroline.
We see earnings per share, $3.22. That's a beat versus the $3.17. Ad revenue, $28.28 billion, slightly shy of the expectation of $28.99 billion. The third quarter daily active users, 1.93 billion. That's basically in line. Monthly average active users also coming in basically in line, 2.9 billion. But we are seeing a slight miss when it comes to its third quarter revenue. Operating margin slightly shy as well. So we are also seeing a breakout of Facebook's Reality Labs. They're announcing a new financial reporting segment structure as well as they look towards to focus on reality, augmented reality, AR, VR. This is, of course, the metaverse pay that we are likely to see. And a $50 billion boost in share buyback. I'm sure that might help the stock a little bit.
Well, that's a big headline. As you said, the red sticky, though, on the Bloomberg, third quarter revenue, $29.01 billion versus the estimate of analysts of $29.45 billion. But that buyback, $50 billion authorization, boosting it. Stocks down about 2.7% here in the after hours, Taylor.
Yes, let me, just on the second page of the press release, Mark Zuckerberg makes a quick 1-sentence comment, and then in the CFO commentary, Tim, that's where we're getting a lot more about breaking out Facebook Reality Labs, FRL. It's going to be a separate reporting segment. They want to give in a lot of resources towards augmented and virtual reality. And then, of course, in this new reporting structure, I think Caroline had alluded to this, going to be now breaking that out. The first segment, they're going to have the family of apps. And then the second segment, as we know, Facebook Reality Labs. So you wonder if this is sort of a new, renewed commitment to this segment, Tim.
Yeah, well, think about what Mark Zuckerberg has been talking about for months when it comes to the metaverse at this time. 3 months ago, he was talking on the earnings call, metaverse over and over again. Analysts and investors wanted to know how much the company was going to spend on it. He wasn't clear about how much it was going to cost. But in the first sentence of the second sentence of his statement today, he said that he's excited about our roadmap, especially around creators, commerce, and helping to build the metaverse. It's just a question of what exactly that looks like and how it's different or even fits in with Facebook's current advertising model.
You know, they've also given a CapEx spend for next year, $29 to $34 billion. And to your point, how much money is being spent on each of those segments? We'll hear more about that. The other thing, Kurt Wagner pointing out, you know, this is an uncommon revenue miss. So at the end of the day, you have as many predictions ahead for Facebook as you would like. The top line fell short.
And it's forward-looking guidance falling short as well. Fourth quarter, it sees revenue $31.5 to $34 billion. The market wanted to see it at almost $35 billion. So that's falling short. They say this outlook reflects significant uncertainty. They say they face it in the fourth quarter. This is to do with Apple's iOS 14 changes. This, of course, is about the advertising, the ability to target advertising, Taylor, and the lack thereof. That's hit Snap. We saw the significant fall in shares last week. We saw Facebook down 5% in lieu of that on Friday. And they have tried to preempt the market on all of this. What the market's going to want to know now is a little bit more transparency about, well, who's looking at their ads as well, and indeed the user base, how many of the youth are still signing on.
We wonder if we get that on the call, if we get a further breakdown instead of just the family of apps, Carol, some of that more sort of individualized look. I thought it was really interesting too. They're mentioning the Apple iOS 14 changes, that those are going to be continued headwinds. They don't necessarily come out and say supply chain issues, maybe in a more of a blunt way, the way that Snap did. Just talking about COVID-related factors and the macroeconomic environment. Those are all the pressures, Carol, on the fourth quarter.
You know, this is the kind of company, these big tech companies, the scale of the numbers when they report, it's just a whole other world. First of all, I want to say Facebook shares, which were down, more than 3% or so, now they're up 2.5%, 2.6%. So we have seen a significant bounce back. Big numbers, though, cash and cash equivalent, marketable securities, they're talking about $58.08 billion as of the end of September. Headcount, 20% increase year over year. They've now got over 68,000 workers. So this is just a massive company, and you know they've got the money to spend if they want to pivot, Tim.
I want to go back to something that Caroline said about viewing this in the wake of what we saw from Snap after the closing bell on Thursday, when we saw shares just tank on Friday as a result. Well, the reason is because Snap caught investors off guard about those supply chain challenges and about iOS challenges. We are not caught off guard. Investors are not caught off guard because Facebook has been talking about these challenges for months. The other thing that I'd say about supply chain challenges, those challenges faced by Snap, as Mandeep Singh pointed out on our show, the advertisers for Facebook are a lot of smaller companies, small and medium-sized businesses that aren't necessarily as affected by the supply chain like those big, CPG companies that advertise on Snap.
Tim, next year's expenses for Facebook could be as much as $20 billion or more higher. So that is how much more investment you're going to be seeing from Facebook. And $10 billion of operating profit will be reduced by that investment in Facebook Reality Labs.
And maybe there's struggles out there, and we see tons of headlines on Facebook. That stock still is up 20%, so investors don't seem too worried, guys. And we definitely are seeing that bounce back in the after hours. All right, we're going to continue to track Facebook. That's going to do it, though, right now for our cross-platform coverage on TV, on radio, and on YouTube. Join us again tomorrow. Big Tech is on our radar. We'll catch us same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so we're watching Facebook, and I do think what's significant as part of this story, and I can almost see the headline, Facebook shares sell off, then bounce back literally within seconds or minutes as I think investors work through it. I mean, the numbers, there's some disappointment, no doubt about it. There's a lot of questions. We were talking about it earlier in the day, and yet that stock bouncing here in the after hours. So investors for the first part, or at least initially right now, are not disappointed.
Fourth quarter outlook, a little soft. The company says revenue coming in a range of $31.5 to $34 billion. Current estimate was $34.8 billion.
Exactly. And still the stock is now still up about 1.2%.
What a difference with Snap, right?
Well, and
Facebook warned everyone.
it does make a difference. I mean, Snap lost almost 30% in a few days leading up to, and then, of course, that earnings disappointment. Let's see what John Ehrlichman has to say about all of this. He follows that tech sector so closely, of course. John is anchor of BNN Bloomberg's The Open correspondent for CTV National News. He's got so many titles. He's on the phone from Toronto. John Ehrlichman, Facebook, which was down, 2-3% here easily in the after hours, right after the numbers crossed, now up about 1.25%.
Yeah, I mean, there's a lot to digest, and you and Tim have been going through some great points here. There's the immediate numbers, and I will say in the quarter itself, guys, the revenue story, Facebook, because of its size, is still able to put up monster numbers. It looks like about 35% revenue growth year over year. So, they're getting back to percentages that we're seeing a couple of years ago. I think Tim brought up a really good point about those Apple changes, just to reiterate on that front, because that does factor into that guidance for the rest of the year. Apple's taken privacy seriously, and if people don't want to be tracked around the web from their iPhone, Apple is making that a reality. For Facebook, they make a lot of money, essentially, by following your footsteps wherever you go. And so I think going back to that Snapchat sell-off that everybody was covering, yes, people were worried about that, but perhaps some of that started to get baked into the story. And then the other part, and you guys went through that too, everyone was wondering about what the new Facebook might look like down the road. And by essentially carving that new metaverse goal that Mark Zuckerberg has out, it might help them to justify some of the costs. It really seems like a Wall Street friendly approach here. You throw in a huge stock buyback and you say, yes, we're going to spend a lot of money, but it's to do this new thing, right? And it's going to be over here. You can look at it. Maybe that's what everybody's trying to digest right now.
Well, so this breakdown of the business segments, the first segment, the family of apps, Facebook, Instagram, second segment, Facebook Reality Labs, as you said, augmentation. I mean, are they getting ready to break up the company in two?
Well, I don't think Mark Zuckerberg has any interest in doing that. I suppose you could make the argument that this maybe makes things even a little bit more complicated. Let's not forget, it was a few years ago that Facebook decided they wanted to draw the attention away from the blue F logo that represents what Facebook had been, partly just because, it was getting a bit uncomfortable for them, but also because they can get growth from a whole host of apps that they've got. I think at the end of the day, the structure of having the metaverse, so to speak, part of the business, or the virtual reality world that Mark Zuckerberg wants to build, I think that they would have had a hard time explaining to Wall Street if the expenses kept rising and it was all under one roof. We're still not, Instagram has been an explosive powerhouse for them, but everything is under one roof as is, so it's hard to know what the driving factors there. One would have to think this is really more about business strategy. But you raise a good point, Carol, because there are so many headlines on Facebook right now that we're often wondering how much they are doing is more about the perception, the political threat versus the business story.
That's a really good point, John. Help us understand, though, a company like Facebook that just makes billions of dollars on advertising and putting ads in our news feeds and in our Instagram stories and in our Instagram news feed, how it makes money with what it's calling the metaverse, how it uses its strengths in what it knows about us and what it knows about our habits to turn the metaverse into something that's monetizable and that people want to spend time in.
Well, I think if you look at some of the successful IPOs we've watched recently, take a company like Roblox, which, a lot of kids started using in a big way during the pandemic. Here's a world where people are interacting with their friends. There's commerce that is associated with that. So for Mark Zuckerberg's team, they're watching the evolution of social media. It goes from being on an app to literally being in a world. For anyone who
has kids or plays Fortnite, right? These worlds where we are living in digitally are increasingly becoming a reality. And then digital payments becomes a larger business within those worlds. And Facebook itself is, still very big and still very global and still makes a lot of money, but its relevance has gone down dramatically. And that's what Facebook is thinking about in the future. We know how the game works. We see what the other players are doing. We think we can do a better job with that. And I think the reality is Mark Zuckerberg made some savvy acquisitions over the years. Obviously, Instagram has paid off in a huge way, now makes up a huge part of Facebook's valuation. But even Instagram, in a world where people are talking a lot about TikTok right now, is going to have its competitive threat. So can they make this move now? Can they invest the money, continue to build on what they've learned through their virtual reality business, and really double down on what's more of a digital payments commerce platform and maybe a little bit different than traditional advertising? Yeah, I mean, you could throw ads into the metaverse, sure, but it almost feels like they want to put the most traditional app ecosystem that they've got in one bucket, and then they're going to try to build this whole new thing. And look, it's pretty amazing. We've watched successful technology. I know this company is dealing with a lot of bad headlines, but successful technology companies have seen the writing on the wall. They've reinvented themselves. IBM wouldn't have been able to get this far along had they not said, we've got to try a new approach. And we might be in the early innings of Facebook doing that. And, that's the interesting thing. Some people have some strong opinions of Mark Zuckerberg, but when there is a founder in charge, sometimes there's less fear about making a huge shift. And this is going to be really interesting. If they say more about the rebranding here of this business in the next few days, I think everyone's going to look very closely at this. There's a lot of ties in to the crypto landscape. So a lot to watch for.
Is the timing logical, or is the timing because of all the crazy headlines that are, well, I shouldn't say crazy, that's not fair, but the headlines that are coming out about the company?
I think it is fair. I mean, if they were ready to go and we have to now analyze this shift in the business, it does take a little bit of the attention away from some of those headlines that are not all that flattering to the company. I mean, look, and whether or not it's whistleblowers that are revealing to us just some of the simplicity of for-profit businesses that, maybe in the eyes of some aren't putting your best interests first. At a time when, big company like Apple, as I said earlier, is taking a stand on privacy, and they're going to, make Facebook feel it in their wallet.
We just want to point out to everybody, Facebook is up about 2.6% in the after hours now.
Hey, I want to bring in Mandeep Singh as well. He's Senior Tech Industry Analyst for Bloomberg Intelligence. He's with us in the Bloomberg Interactive Brokers Studio. Mandeep, I know you've been poring over these numbers since they came out just about 14 minutes ago. Shares are oscillating between positive and negative territory, but higher by more than 2%. John described this as a really Wall Street-friendly report. Take us into why you think shares are moving higher, despite the fact that there were some misses.
Yeah, well, a lot of bad news was priced in. The stock has been down almost 15% in a matter of 2-3 weeks, so a lot was priced in. And what they came out with wasn't really a bad report. It was more a reflection of, okay, yes, Apple has made privacy changes. That's hurting us as well, but they didn't give us the pricing growth, ad pricing growth, and impressions growth in the release. So hopefully they disclose that on the call. That also will tell investors in terms of what drove these kind of results, because the results on paper look pretty decent.
Well, and it is interesting because it does feel like there's a lot of headlines about corporate structure and all that stuff. And to me, I'm like, well, wait a minute, why are we doing this now? Do you see that it's logical that they're doing this right now, Mandeep? Or is it because there is so much other serious stuff going on and maybe they're trying to move the attention away?
Well, one of the biggest investor criticism of Facebook, a company of the size of Facebook, is their lack of diversification. So what they're trying to show with this new structure is, look, guys, we've got this virtual reality, augmented reality segment. it is still a drop in the bucket, but at least it's growing, triple digit. It's growing very fast. And they want to give investors more visibility in terms of how they plan to diversify the top line.
So in other words, if we're losing young Facebook users, it's okay, everybody, because we're going to be the metaverse. Is that what it is?
Yes, but I have my doubts on this whole metaverse concept and how Facebook could ramp it up, because there is an inherent trust issue, both with the consumers as well as with the ecosystem.
Right.
The gaming companies are very skeptical of Facebook as well. They don't want to build on Facebook's platform, and I think that is the key thing that they have to address, the trust.
Which is remarkable, considering how big their platform is.
Hey, John Ehrlichman, come back in here and weigh in on that. How would Facebook be able to get past that trust issue, especially with those younger users, if it wants to attract them to a metaverse?
Well, they have a lot of people that are tied into their platforms, so they can start there. I had a funny conversation with my wife today, because she said so many of the memories from our family are in the Facebook world that we're basically stuck with the platform. There is a great opportunity for them to give a full court press here, and I still remember when this company was going public and we were covering it for Bloomberg, and Mark Zuckerberg literally started ripping out desktops from the office and got everybody focused on the phone because they weren't really ready with the mobile strategy. They acquired Instagram right before the IPO. And so I think there are enough people on Wall Street that are getting the benefit of the doubt. Mandeep raises an excellent point. This is an advertising business today, even in the early days when they were benefiting from, gaming on their platform. Think way back to things like Zynga. That ended up being such a small part of the business. However, there is such a momentum story in technology surrounding this concept of the metaverse. I really think they're going to get good attention from Wall Street for a pretty good amount of time. People might get impatient, but that gets back to the fact that, Carol, you said this earlier, they got a lot of money. They're going to buy back a lot of stock. They just announced today they're going to try to navigate through some of those questions and maybe some of the skepticism by using what they've got, which is a lot of money.
All right, Mandeep, so what would you be asking on the call? What do we need clarification on or more specificity?
I think they didn't give us the two metrics, ad impressions growth and ad pricing growth. Those are critical because you want to know what is it that's really working. I think the ad pricing growth continues to be strong. Where they must have fallen short is on the ad impressions growth because it's a function of time spent on the platform.
Right.
The company's saying it's going to take a $10 billion reduction in operating profit this year for investments in Facebook Reality Labs. Is that enough information for investors who want to know how much they're spending on the metaverse?
Well, we know that directionally the operating margins are going to be down. They're going to be spending a lot more on CapEx, on just R&D, building this new metaverse. So I think we have seen peak operating margins with Facebook in a while.
Are we being too short-sighted, though, by focusing on advertising? That's their bread and butter right now, right? That's important. It's what we all freaked out after Snap. But are we being too short-term focused, especially when they're talking about longer-term, maybe metaverse? And just got about 30 seconds.
That's the cash cow. That's the cash cow that will allow them to feed into all these new businesses they want to build.
All right. So Facebook, we want to know about ad impressions growth and ad pricing growth, right?
Yes.
All right.
Mark Zuckerberg, if you're listening, talk about it on the call.
And while you're at it, what's the name change? What are we going for? We just want to know. You could it's just between us. All right, we're going to run. Bloomberg Intelligence Senior Technology Analyst Mandeep Singh. His research is a must-read on Facebook and so many other companies. And our thanks always to his analysis, John Ehrlichman, anchor at BNN Bloomberg's The Open. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So you watch Succession, right?
I do. I didn't get the second episode of the third season yet. I'm one episode behind.
Their second season, right?
Yeah,
So
but it was
they're-
at like 10 last night. I wasn't going to stay up.
Well, you don't need HBO because there's actually a real life Succession playing out right now.
It's happening in Canada, and we're going to talk to Scott DeVoe about it.
Exactly. I thought Canadians were all warm and fuzzy. Is that
This
a
is a
bad
good story.
generalization?
This is an amazing business story.
It is an amazing. We're going to get to it in just a moment. Also amazing, as always, is Charlie Pelt. Lots of news after the close here, Charlie.
Indeed. FB's the big one. Turns out the July to September quarter was a decent one for Facebook, which reported a bigger than forecast profit, even as that $29 billion in revenue and its monthly active user count of just over 2.9 billion both proved weaker than predicted. Facebook also will begin treating its virtual reality division as a separate business, suggesting that the unit, which includes Oculus, has been dragging down overall results. But after hours now, we've got Facebook shares trading higher by about 2.5%. Stocks rose to another record as traders geared up for a string of earnings reports this week from major tech heavyweights, while keeping in mind inflation concerns and rising COVID-19 risks. As for the earnings backdrop, Nadia Lovell is senior equity strategist at UBS Global Wealth Management. She was our guest right here on Bloomberg Business Week.
It's still early in the season, but we think results are coming in really strong. It's coming even better than our initial above consensus expectations. We do expect that the beat rate that we've seen so far, 13%, much of that being driven by financial. We look for that to moderate. We are looking for earnings growth of this quarter of over 30% year over year.
And again, the S&P climbing to a record today, up 21 points to 4566, a gain of about 0.5%. The Dow up 64, up 0.2%. NASDAQ up 136, up 0.9. 10-year yield 1.63%. Bitcoin up today by 2.5%, 62,694 on Bitcoin. Gold, spot gold up 0.8%, 14.11 the ounce at 18.06. West Texas Intermediate crude down 0.2%, 83.63 a barrel. Recapping, S&P at a record up 0.5%. Facebook shares after hours now after earnings up by 3.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, two different men are claiming they're chairman, and two factions of one family is each saying that they have control of the board.
I'm chairman. No, you're chairman. No, I'm chairman.
No, it's not a recap of last night's episode of Succession.
Could be.
It's all about Rogers Communications Incorporated, the Canadian company, where Roger Sion says that he's the chairman now, and the company says he's not. Scott DeVoe is deals reporter for Bloomberg News. He joins us from here in New York City. Scott, let's start high level here for people who haven't been following this story. What's been going on with Rogers that has led to this power struggle that's playing out right before our very eyes?
This is probably one of the strangest situations I've ever covered as a business journalist. And, I've covered a lot of really strange boardroom battles over the years. But essentially what's happening here is the chairman of Rogers, who is the son of the founder, tried to fire the CEO. They were basically scheming to get the CFO to replace the CEO behind the board's back and behind, the rest of the family. It came to light because the CFO accidentally butt dialed the CEO, and he took that to the board, and they retaliated by firing the chairman, Edward Rogers, from the board. But Edward Rogers also is the chair of the family trust that owns 97% of the voting shares in the company. So he went back and says that he's now fired 5 directors of the board and reclaimed the chairmanship. It's a mess. It's complete chaos.
And Mom doesn't seem too happy either.
No, in fact, Mom was Loretta Rogers, the mother, the matriarch of the family, was the one you read the resolution to fire her son, Edward Rogers, as chairman. And the fight now is going to the courts in British Columbia.
And their siblings who are playing out, they're going to have fun at Thanksgiving. Well, they don't celebrate Thanksgiving, right? That's kind of our.
There's Canadian Thanksgiving.
Well, there is Canadian Thanksgiving.
They already had it. It was in October, so.
I bet that was fun. Well, so what happens here? I mean, it's a publicly held company. There are rules in place, there's an infrastructure in place and the way things go. How might this, ultimately play out?
So I think, and look, this is a really complex, fast-moving situation, but I think what's going to happen is it's going to go to the BC courts. They're going to make a ruling on whether Edward Rogers has the legitimacy to replace the 5 directors that he did at the board level and reappoint himself as chairman. They're going to determine whether he has to do that or whether he's able to do that through a written shareholder resolution, as he says he has, or they're going to have to hold a shareholder meeting. Ultimately, though, because he controls the 97% of the voting shares, I mean, it seems like he's likely going to win in the end, but it could be drawn out for months.
Well, as Carol mentioned, this is a publicly traded company. It's got a market cap of $28.9 billion Canadian, so above $20 billion US. What has been happening with Rogers as this has been playing out as a company? Because shares are down more than 4.5% this year.
Yeah, so I think it's basically when the news started to break about the attempted coup that took place with the CEO. The shares traded down, and then when they fired the chairman, they rose again. But now, because of the chaos that was created over the weekend with this, board meeting where they reappointed him, he's reappointed himself as chairman. I think it spooked a lot of investors. But one thing that's really important to this whole situation is Rogers is actually in the midst of a $16 billion takeover of its competitor, Shaw Communications.
Right.
And so this is all playing out. Well, the company is going through a pretty dramatic merger with another company. And it seems like it's largely rudderless at this point.
The other company's got to be like those in-laws. They're like, do we really want to be part of this family? I don't know about it. Great reporting. We've had fun talking about it and following your reporting. Scott Deveau joining us. He's Bloomberg News Deal reporter on the phone in New York City. Just want to rehash shares of Facebook because they are up now about 4% in the after hours. They've peaked even a little bit more here in the after hours. Talking about fourth quarter revenue of $31.5 billion to $34 billion. The estimate out there is $34.8 billion, so some could see that as maybe potentially a little bit light. Third quarter revenue was a little light, $29.01 billion, $29.45 billion was the estimate, but they're divvying up the company basically in two, correct?
Yeah, Facebook Reality Labs will be broken out as a separate segment. Apple iOS 14 seen as creating headwinds this quarter, but Facebook has warned that for months.
All right, let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden is looking to build support for his Build Back Better agenda. He traveled to a transportation hub in northern New Jersey to tell residents there what he's trying to do. Bloomberg's Irv Chapman has more from Washington.
The president spoke at a ceremony marking the start of reconstruction of what's described as the busiest railroad bridge in the nation. The Portal Bridge project is showing why investments like this are so important. When the Portal Bridge was built, it was state-of-the-art, and it really was. But 110 years ago, with my infrastructure bill, we're going to make sure projects like this are just the beginning. The president spoke as he closed in on an agreement among Democratic factions in Congress that would permit passage of the infrastructure bill and a compromise version of his companion economic spending bill. In Washington, Irv Chapman, Bloomberg Radio.
Relatives of the victims of the Surfside, Florida building collapse are demanding a memorial be built on the site. Reverend Bill Minson is with 2-Day Ministries.
It's hard to imagine that anybody cannot understand the significance of a memorial on that site.
Minson says he does not believe any developer wants to build on a property that would ignore the deaths of 98 people. Jeff Bezos' space company, Blue Origin, is releasing plans for a private space station. It's being called Orbital Reef. It will be built in partnership with other space companies. Orbital Reef is expected to be deployed between 2025 and 2030. The station is described as being habitable for up to 10 people and would be used as a mixed-use business park. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Mazur, Tim Stenevec in our Interactive Broker Studio. It's only Monday, but we've already gotten one of the big tech companies out in terms of their earnings. We're talking about Facebook. We talked about it all day today because there are concerns about content, again, on the platform, where they're seeing growth on the platform, and doesn't look like it's necessarily in that younger audience, which some would talk about that's important to longer-term growth. But as for the quarter...
Miss on several fronts, including revenue for the most recent quarter and then outlook for the quarter, but investors are okay with it. Shares are higher by 3.8%. The profit beat estimates. User growth is better than expected. Apple iOS 14 is seen as creating headwinds this quarter. Remember, that's the privacy change that that brought down shares of Snap last week. Apple has been talking about this for months, so they pretty well telegraphed it to investors.
Right. If you think about researchers, they've all been certainly factoring that in. So Facebook, the world's largest social media company, reporting strong third-quarter revenue growth, gave a tepid forecast for sales in the current period, citing persistent headwinds from Apple's restrictions on consumer data collection and uncertainty related to the post-pandemic economic recovery. So puts out our own Naomi Nix and Kurt Wagner, who we talked about earlier. Now, the stock, which dropped in the after hours 2-3 percentage points, and maybe even a little bit more, is now up about 3.7%, and that's off its highs in the aftermarket. So quite a bounce back, Tim, and pretty quickly.
Yeah, Facebook also, Facebook, spinning off Facebook Reality Labs to a different segment, a separate segment. It's cutting 2021 operating profit by $10 billion. This is a build out of the so-called metaverse. Facebook's last earnings call, investors over and over again were asking for clarity on how much the company was spending. Here's a little bit of clarity in the way that it's going to hit operating profit.
Yeah, exactly. Like a little bit more information.
Yeah.
And let's not forget, the company has a ton of cash, and they announced that they are going to be doing, announces a $50 billion additional boost in their share buyback authorization. So that certainly has got to give investors a little bit of a little extra step.
Shares higher by 4% now.
Yeah, exactly. All right, you're listening to Bloomberg Radio.
Business Week continues.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Facebook shares, they're pushing higher, up by 3.6% now after hours. It reported strong third-quarter revenue growth, but gave a tepid forecast for sales in the current period, citing persistent headwinds from Apple's restrictions on consumer data collection and uncertainty relating to the post-pandemic economic recovery. Records today for the Dow and the S&P 500 index. Traders gearing up for a busy week of technology earnings while keeping in mind inflation concerns and rising COVID-19 risks. S&P up 21 to a record 4566, up 0.5%. The Dow up 64, up 0.2%. Nasdaq up 136, up by 0.9%. 10-year yield 1.63%. Spot gold up 0.8%, 18.06 the ounce. And West Texas Intermediate crude down 0.2%, 83.62 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So our next guest has written about her own passage and journey from Moroccan immigrant to U.S. citizen. And as a result, she's also looked more broadly at the subject and issue of immigration rights, liberties, Tim, and American citizenship.
Got to turn my microphone on, excuse me.
It's been a
Layla
long day.
Lalami is a novelist and essayist, author of Unconditional Citizens on Belonging in America, joining us now on the phone from Los Angeles. How are you? It's really great to have you.
Thank you so much for having me.
And congratulations on the paperback version of this book. Take us into the account for people who haven't read it. It's personal, and it takes us through your journey as a Moroccan immigrant to a U.S. citizen.
Yes. Well, I started thinking about this book a few years ago, but really the impetus was that it was 20 years since my naturalization ceremony. I came to the United States as a foreign student and didn't really intend to immigrate, but, you know, life sort of intervened. I met an American, and we got married, and before I knew it, I became an immigrant. So it was really a question of chance more than anything else. And once I became a citizen, though, it was very much a commitment that I undertook with a great deal of seriousness. And so I set about really sort of studying everything about U.S. history. And this book came out of a series of essays that I began writing a few years ago for different magazines, The Nation, The New York Times. And it basically looks at my own journey from foreign student to immigrant to citizen, and more broadly at the relationship that we have to one another as citizens of the United States, whether just having the status of citizen grants certain rights or whether there are differences.
Right, we're all, descendants of immigrants. I mean, my dad was first generation, my mom was second generation. I mean, it was something we talked about growing up, about how our, great-grandparents or grandparents came into this country and what they came with and how they started. Take us back to the moment where you take the oath and you become a citizen. Mm-hmm. What was that like? What was going through your mind?
Well, so this took place in July 2000, and the ceremony took place at the Pomona Fairplex, which is this massive facility in Los Angeles, and is traditionally the site of the yearly county fair. This is where the Los Angeles County Fair takes place each year. You might think of it as a place of family fun. This is where we eat churros and pet goats, and it's really just a place of great joy. And that is where INS, back in the day, it was INS, basically had set up the citizenship ceremony. They gathered a couple thousands of us in one hangar, and there was this judge that came and delivered this beautiful speech, and then everybody was sworn in at the same time. So it was a very moving ceremony. And it was really only much later I was trying to find out how big the facility was, Pomona Fairplex. I was trying to find out how big it was, 437 acres. But I was trying to find that out, and it was really through that simple act of Googling that I discovered that it was the site where back in the 1940s, Japanese and Japanese Americans had been brought to be processed and then to be sent to internment camps in Wyoming. And for me, just the discovery of this sort of like intersection of history just kind of opened up this whole idea of like the myth which is a national myth of the United States being a nation of immigrants, when in reality, throughout its history, it has constrained immigration through a variety of laws, beginning with the Chinese Exclusion Act. But also, even if you are born and if you are a natural-born citizen, you can still face situations like what happened with Japanese Americans, where you do not have the same protections of citizenship as other white citizens. So it's that contradiction and that erasure of history at the Pomona Fairplex that basically gets the book started.
Well, it's even something that's happening right now and happened in recent years. We saw presidential campaigns run on the issue of immigration, building a wall. President Trump. Go ahead.
Yeah, no, I was going to say that's exactly right, that it was not until 1965 that racial-based constraints on immigration stopped, meaning that the United States, you could come from anywhere in the world and still apply to become an immigrant. But between 1965 and now, we sort of enjoyed like 50 years of sort of a relaxed immigration laws. But now, in the last few years, we see new laws being put in place to restrict immigration targeting certain countries. And so that's, like, as you said, candidates running on bans and whatnot.
Well, and very early on, you talk about a couple times coming back, you're a U.S. citizen, but coming back into the U.S. from an international trip. And one time, I believe he was your husband at that time, asked, I guess an agent, a customs or border agent asked, how many camels did you have to trade in for her? And then 10 years later, you talk about another time coming into JFK. That was, I think, LAX. Another time coming into JFK, and you said you were returning from a vacation in Morocco. This time, my husband was asked whether he'd had to trade some cows for me. Things like that. And forgive us, we only have a couple minutes left, and hopefully we can continue this conversation at another date. Things like that, what struck you, and what do you hope that somebody who reads this book, what do they walk away with?
Well, I think one of the things that I hope that people take away from it is that, we have this idealized view of citizenship as being a great equalizer, when in reality, and all too often, it actually does not provide the same protections to everyone. And in the case of this border agent, yes, it's kind of a comment, it's inappropriate, it's offensive.
Shocking.
But that still is mild compared to what other, in some cases,